the first level of margin of safety is you're buying the better stock, you're buying the strongest stock. And if the market falls, then you're in the strongest stock. It might not fall as much and you're a little bit safer. I don't know, trading's really hard, right? In the beginning, everything sucks. You're losing all the time and it's designed that way. It takes time. Like the market's only open a certain amount of hours in the day. Those cycles only happen once or twice a year. You don't know when it'll happen. If you respect your losses all the time, you'll never have a blow up. If you only look at your trades, you don't know what you're not seeing, okay? And the most important thing is to be in the right stocks. It's important to also compare the stocks against each other each day, because then you're doing that relative strength thing in your head. You don't need the relative strength number. Just take the market for what it is. Don't think, oh, is the market faking me out or whatever? No, just whatever's happening in the market, that's all we can base our decisions on. Study a lot, study as much as you can, but don't go overboard because yeah, it comes at a cost and you can't push things.
Okay, hello everybody, and welcome back to the TraderLion podcast. I'm your host, Richard Moglen. This is brought to you by the Ultimate Trading Guide. You can pick up your free copy of this excellent resource down below. Joining us today is someone who I'm really excited to talk about. He is a top competitor in this year's USIC in the $1 million division. He's also a momentum swing trader. Anthony Shi, welcome. Great to have you on.
Thanks, Richard. Really excited to talk to you today.
Yeah, awesome. And this will be really good. I'm really excited to dive into your process, your methods, and I know we're going to run through some charts and kind of see your process come to life as well. But to kind of start things off, I always like to ask about people's backgrounds, how they first got interested in trading. So bring me back to the very start. How did you first get interested in the markets?
Yeah, so a little bit about myself first. I grew up in Sydney, Australia, born and raised. With my degree, my background is in mechanical engineering, and that's kind of where I worked at first. I kind of moved around a bit, but just as I was working, I was trying to grow my savings basically. And stock market was a common way to do that. You do a bit of Googling and you see that Warren Buffett comes up everywhere. And so I started off as a value investor. Did that for about 3 or 4 years and realized that upside was kind of capped. I found that the turnover for stocks was not really, it wasn't very quick. And so the iteration and the cycles for learning were really slow. And so while I did okay there, I was really looking for something else. I was always looking for something else as I was value investing. And then someone sent me a podcast with Chris, and I had a blueprint. So I always thought trading looks nice, there's people who make a lot of money, but I wasn't sure that there was a blueprint for it. And here it was. Here's this guy who puts everything out there. He's turned 5,000 to 100 million. At the time, it was like 80 million or something like that. Yeah, so I really wanted to dive in and have a look. You could see that his executions were moving the market and everything on stream. And so you knew he was the real deal, basically. And so that was basically it. So 3 or 4 years into value investing. And then I started trading in around February of 2021. So that's pretty much how I got started.
Yeah, it's funny. That's a very engineering way to think of it, feedback and cycles. I'm actually a mechanical engineer. That's why I got my degree in as well. So that's cool.
Oh, nice.
And I was just gonna say, it's quite a jump from the Warren Buffett methodology to Kalamagi. How is that kind of process and learning? Obviously, you've got a stream, which is a great resource, but yeah, talk to me about that process of actually kind of learning his style.
Yeah, so I guess the reason that I jumped in was because there was so much information.
Yeah.
In the beginning, there wasn't too much in terms of filtered information, and slowly the community is great. In the spirit of Kulamagi, I think everyone comes in and they start contributing. People start posting his positions, and then they start analyzing his streams. They write summaries, and so there was really at that time there wasn't too much, but it was coming. And what really helped is there's a big community online, and you can find people who are equally as passionate and ready to go somewhere with it. Going back to a question about value investing to trading, it is a huge leap, like opposite ends of the spectrum. I think it was a bit strange for me in the beginning because as a value investor, you wonder whether technical analysis is magic and voodoo and all this kind of stuff.
Yeah.
Yeah, but I think the people who say that haven't really spent the time to try it. Or maybe they have and they've failed, or there's a low win rate and then they just give up and they think it doesn't work. The transition, so I'll explain how the transition actually happened, is, like I said, I was always looking for something new. And at that time, 2021, 2020, you're all familiar, there was compound, they call them compound bros, and they would buy all the growth stocks. and there was the Motley Fool, I think, and they're pretty much the strategy is copycat investing, and what that means is they just buy stocks and hold forever. Amazon is one of their big winners, but if you let some of your stocks go to zero, that starts to introduce a mathematical possibility, which is that you can calculate the win-loss ratio, you can calculate the expected value. So that's where it really started. And being an engineering background, I would pull up the spreadsheet and I'd start making a table, win percentage. Yeah. And then I was continuing to value invest, but it was in the back of my mind, constantly in the back of my mind with the Cool Maggie. I heard his podcast. I actually initially wrote it off and I thought, this guy's just lucky, right? Like he's got a 30% win ratio, and he just hits big winners. And it's 2020. He must be just getting lucky. Stuck with me. I had the win-loss ratio kind of idea in my mind, and then I started to realize he was getting lucky, but he was putting himself in a position to get lucky.
Right.
Yeah, and that was pretty much it. There was no going back. Yeah, I think that was pretty much a transition.
Yeah, and when you first started trading and placing your first trades with the momentum swing trading style, what were the first kind of mistakes that you found yourself making? I remember, thinking back on my first 2 years, I would buy extended, I would buy the right stocks at the wrong time. My sell rules I didn't quite have figured out just yet. Market conditions come into play. So I'm curious to hear kind of for you, what were some of the big pitfalls that you fell into, and how did you kind of learn from that and iterate and gradually improve as a trader?
I'm really excited to talk about this because I'm new enough to remember what it was like in the beginning.
Yep.
I think one of the things learning from Colin Maggie too is that he is so experienced that I think he has trouble explaining some of the basics. And so, yeah, so I started trading from Australia in Sydney, and the market open varies between 11:30 and 1:30 a.m., right? So from the beginning, it's always been really important to me that I have the systems in place. In the beginning, it wasn't like that at all. I think like Tim Sykes was one of the guys I first followed, and he would, pre-market scans, and then I would try and incorporate some of Cool Maggie's ideas, which is, buying EPs. It was a huge mess. I would try and copy Cool Maggie on his streams. It was terrible. So that was the very first experience.
Hmm.
But then going forward, I think after 6 months, really deep diving his process, you pretty much know all you need to know in terms of knowledge. You need to kind of go through the experience of finding the nuances. And there are a couple of levels that I went through. I think the first one is you're a pattern only trader. And you see this a lot. People learn bull flags and they trade bull flags. But really, in my eyes, what I saw was I would do my scans and I see his chart and I'd be like, okay, is this a 5-star chart? Is this a common bull flag? Yes. Next one, yes, no. Next one, yes, no. And you would trade those and you get varying results. There's no pattern to it. But you're seeing things in isolation. You're not seeing a market. You're not seeing stocks in a common industry that compare against each other. So then slowly you would realize that there's a thing called relative strength, and you would compare the charts against each other. And so that's sort of the first level of margin of safety is you're buying the better stock, you're buying the strongest stock. And if the market falls, then you're in the strongest stock. It might not fall as much, and you're a little bit safer. So that's kind of level one. Level two, I think, is the sectors and themes. And so as you get familiar with the market, as you spend time in the market, you start to see these cycles of the same stocks rotating over and over as well. As you see the leaders, the stocks with relative strength, they come and go and they keep showing up in the scans. And so you start to familiarize yourself with how the market actually moves and how it works. And I think one thing that really helps is at that time, you start to memorize the stocks in a sector. And so like you see NVIDIA go up and you immediately check SMCI, you immediately check NU and TSM and whatever, R. Then you also know the ETFs. So you go SOX, SMH, and then you might look into the holdings and you see that one holds more NVIDIA, and that's why it's got relative strength. Then you find that there's 3 times leveraged ETFs as well, and you can trade those. Anyway, so that's the sectors and themes. One other thing you might notice is that, that I did at that time at least, is that catalysts are really important as well. And so catalyst being probably the most common one is earnings, but then you might get sector moves as well, like the marijuana stocks recently, or you might get a war headline. and then you get the what do you call it? You get the oil stocks that go as well. So that's kind of sectors and themes. So now you got two layers of margin of safety. You've got the RS and the strong stock, then you overlay the sector. And so if the market goes down, at least you're in the strong sector. And if you pick the wrong stock, at least you're in the wrong sector, your right sector. Okay, so that's level number 2. Then level 3 is situational awareness. And as we go, you find that the importance is inverted. So the more you the more you focus on theme and sector, the less the pattern really matters if you're in the strong stock. The more that you focus on situational awareness, the less the other two matter. But this one's really nuanced. So there's a lot of nuances to it, but a few of them, I think the first one for me that I noticed was that the same entry tactic is the complete opposite signal at the start and the end of the swing cycle. So firstly, you realize that these big moves, where you zoom in and you see that you buy stock and it just takes off and it never comes back to your entry. It only happens, 1 or 2 months a time and maybe twice a year. And Zenger said that, Carnegie said that, and based on personal anecdote, that's also what happens. Yeah, so then the entry tactics might be different. So for example, a stock, you have a base and then it gaps up. In the beginning of a cycle, that's really strong. You buy it, it goes straight up. At the end of the cycle, 2 or 3 legs up in, I don't know, month 2 or week, whatever, 6, they start to squat and they don't work as well. In the beginning, you might also get like a really big base that breaks out and then really tight 1 or 2 weeks. And normally you would see that as extended. You buy it and it goes straight up. But then later on in the cycle, you buy it and it squats. It doesn't work. Or it goes up one day and the next day it squats. Then other things like signals, like I guess 3 days into the initial move in the beginning, you might get selling and you might get like a red candle. Normally you would freak out about that, but it's clearly fine at the beginning. At the end, you just need to start. Right. So the same tactics have the opposite meaning throughout the cycle. So that's a really big nuance. Another one might be that you get 3 different phases of stock moves. So in the beginning, it might, whatever sparks it, like for example, recently with NVIDIA, and so the AI sector is really strong, right? It's going to change the world, and there's this company that's going to benefit from it. It's backed up, it's got backlogs, and it's great technology. And so everyone starts jumping on the train. The stock goes up like crazy. Then you have the second batch of stocks, which are more growth, which might have a bigger story, but they don't really have the fundamentals to back it. So then you have your ARMs, which your ARM is the valuation is really high, the company is really good, but it's not like an NVIDIA where you say the forward earnings is 20 or 30 PE, right? And then you have your third sector, or your third group, which is the they're called the bottom of the barrel stocks, right? There's another name for them, which I won't say. Yeah, so you got like Sound, CXAI, and all this stuff. They're still AI, but they might not have earnings. They might be losing money, but they're selling a huge story. And then you realize, anyway, we're still talking about situational awareness, right? And so you find out that they kind of go in phases. So initially you have a grain of truth, which sparks the thing. Then you have the more growthy stocks, which jump on board as well. People start realizing, oh, this could be the next NVIDIA or whatever it is. And then slowly as time goes on, you see that everyone makes money. I think the participants get a bit excited and they start moving into the bottom end of the spectrum in terms of stocks. And then they start making moves. So then you start to change focus and you start to expect stocks to move a certain way. So that's kind of situational awareness. And of course, later into the cycle, things get euphoric, and you just have to realize that it's not going to last forever, and you slow down, right? So that's kind of how I look at situational awareness as well. So then you have these three levels. I think the next level on top of that is putting it all together. So this is where my process really comes in. Is you might have those 3 things, right? And at any one time, you might only see 2. So you might see a pattern and a theme, but then you got to work out, all right, is this the right environment for it? Or you might get the situational where it's the right time, and there's a theme, but there's no pattern. So then you're kind of waiting for a good entry. Or you might have a theme, so the right time and the pattern, but then it's just a random stock. It might have strong relative strength. The chart looks great, but it's not in that main sector that's going.
Right.
Yeah. So I think those are kind of the main levels to my progress. And one I think that another one that I think is really important as well is sort of the emotional is yeah, is the emotional side, right? The mental side. I don't know, trading's really hard, right? Trading's really hard. In the beginning, everything sucks. You're losing all the time. Um, and it's designed that way. I think if you look at behavioral finance, this is something from earlier in my days.
Hmm.
I looked at behavioral finance and psychology. Um, we all know the mathematical equation for profit and loss is that expected value formula, right? So you have the 30% hit rate, win rate, and then it's a 3-to-1 win-loss ratio. You can kind of calculate what the expected value will be. And so 0.3 times 3 is roughly 0.9 minus 0.7 times 1. You're left with 0.2. So 0.2% per trade. You flip that 100 times and it's 20%. You flip it 500 times and it's 100%. The thing about behavioral finance is that there's this thing, what's it? It's a cognitive bias and it's called loss aversion. Part of that says that you feel the magnitude of a win 1/3 as much as the loss. All right.
Yep.
So then you adjust the expected value formula for that, and the expected value of the emotions is negative. Right. So it totally makes sense and it's designed to make you feel terrible. And that's only in the stocks that you trade. The stocks that you miss, that you feel terrible for missing, that adds to it. It makes it even worse. Okay, so um, at some point you realize this, it's terrible. You might master the first three, but if you don't have a hold on your emotions, then it's going to really, you're going to quit. And I think we saw a lot of that. I started in 2021 just before the bear market, and there were people that were quitting literally a day before the 2nd of November when we got that big breadth day, which started the 4-month rally. And so that's super duper important. I do have some tips and stuff for that, but I don't know if you want to go through that.
I'll follow up on that because I think that's good. And first, taking a step back to those different levels you were talking about, I highly recommend people kind of rewatch that and maybe watch it a few times and kind of think about where you are currently because there's a lot of subtleties there that I think you expressed really nicely. And the situational awareness part, that layer, and then of course the emotional layer on top of that, that it's like the first two layers, memorizing patterns, learning that technical analysis, you can learn that relatively quickly, but then it gets harder and harder to level up. Um, which is the fun of it. It's the challenge of it. All of that.
Yeah.
Why we stick around. But honestly, like it seems like you've really managed to accelerate your learning curve pretty quickly, starting in 2021. Do you credit that to something? How do you think you've kind of progressed and or is it just kind of dedication and putting a lot of hours, putting a lot of time into it?
There's a couple of things. I think at that time where I was in my life, there was also COVID there, right?
Yep.
For a certain period. And so you're kind of locked in your house and you had to. I also, just my natural personality with things is just to get really obsessed, really deep. Every waking moment is focused on these things. Now I have a wife and a baby on the way, but at the time I had none of that. And so literally it was just every waking hour.
Yep.
But that only gets you so far. You can't just um, you can't spend every waking hour on it and then expect that you'll get the experience straight away. It sounds obvious, but we were talking about those market cycles, right? The situational awareness. Um, it takes time. Like the market's only open a certain amount of hours in the day. Those cycles only happen once or twice a year. You don't know when it'll happen. And so for you to think that you can put in 20 hours a day, sleep 4 hours, which is just kind of what I did in the beginning. And I got really frustrated because I thought input should equal output, and that's really not the
Right.
case.
Right.
A lot of the lessons I learned early, I actually had to relearn in the end because we went through that bear market. We didn't see any of the growth stocks go. I wasn't focusing on those at the time. There's commodity stocks, but I wasn't looking at those. And you forget the lessons. But then you really need to go through a few of the cycles. You need to make the gains. You need to give them back to realize there's a situational awareness component. You need to be in the wrong stocks to realize that there's a sector and theme.
Yeah, I agree. Like you can hear it from somebody else, but experiencing it does change things. And I'm still making mistakes. Like I know I should position this way early on in the cycle and press the gas, but that like it's scary. Like right. There's a lot of uncertainty. Like things are shaping up, but it might not end up being an uptrend that you can profit from. So it definitely takes time. It takes seed time to put all the pieces together. Um, I want to ask you, outside of Kalamagi, were there any resources or individuals, books elsewhere that helped you along your way that you found a lot of benefit from?
Yeah, absolutely. All of them is the answer. I studied all of them. So
Hmm.
when I started in February 2021, I spent the first week or two probably listening to all of the Chat with Traders podcasts because it gives you exposure to all styles.
Right.
And then if you find someone interesting, you'll jump in to their Twitter or whatever it is, their X, and then you would just go through everything. Um, the ones that I think, if you're interested in this swing trading, you decide this is where you want to go. Kulmagi, of course, and all of the people he learned from, which is Pradeep, obviously from StockP. He has
Hmm.
a lot of really good content, and he overlaps, so the ideas overlap, and yeah, it works better that way. You also have Minavini, of course. Who else is really? Oliver Kell, I think, is really good as well.
Hmm.
Um, yeah, I think those are the few guys. As far as books, um, again, all of them. So I think the one that I really liked was Darvis, How to Make $2 million in the Stock Market, because it's more a journal of his trades. And the way to read it is to open up the chart where you can. Those charts, you can probably, I think you can find some of them online.
Hmm.
I can share those as well if anyone's curious. But you go through and you mark it up with the Dow as well, and then you start to implement those patterns and then the situational awareness as well. And you can really learn things from them. He traded a little bit different though. I think he he full ported a lot of positions and things like this. I'm not sure. I don't know if those are the right lessons to learn. But anyways, so Dallas is a good book. What else is good? Yeah, Minavini's books are all very good, of course. They give a really good overview. Books like Momentum Masters with Minavini, Richie, and so I really
Zanger.
like
Yep.
yeah, and Zanger. Yeah, I really like the ones where they give you applicable they show you how to do something.
Right.
The storybooks are good, but I don't know. I struggle to relate with them a little bit. Yeah. What else? Let me think. Other really good resources. Yeah, just you have to read all of them, right? And then probably what you do is as you go through the levels, like you said, you understand where you are, and then every time you kind of learn something new, or you advance to one levels, or you graduate from a deep dive in whatever you're learning, be it patterns or themes, read the same book again. So maybe the Davis one, and you realize
There's
they're
so much
already
more.
talking about this.
Yeah.
Exactly, there's so much
Yeah.
more. Um, yeah.
No, I think that's a good list. And if you think of others, we'll like link it down below or anything like that. Um,
Hmm.
yeah. So coming back to sorry your mistakes early on, because I think it's a really important thing. Um, were there any kind of big losses that you experienced at the beginning where you're testing things, where you bought your first DP, or were there any kind of key trades that really change your thinking where you like made a realization that this is how it should be done, or yeah, anything that stands out in particular that were a really important lesson for you, that kind of flipped some switches?
In terms of single mistakes, I don't really think so. Um, oh yeah, okay, here's one. So I I would always one of the good things about starting with Kulanagi or anyone who kind of knows what they're doing is they'll always teach you risk first, right? So I always one of the best things about Kulanagi is that when he teaches, he says just put a stop in at lower day and then just trail. Right? He keeps it really simple. It's not really how I trade too much now, but
Hmm.
in the beginning, that's what you do because if you respect your losses all the time, you'll never have a blow up, right? And you might chop yourself up, but it won't be a disaster. It's not like day trading where you don't have a stop shorting and it just it blows past your stop. Um, so there's not one single blow up. The thing, okay, there's two experiences that I think were the biggest teachers. One is so I thought really highly of myself. I thought that that I had studied things more than anyone else, and I thought I should make money. And so I did with yeah, I did with certain runs, those 2 month periods or those couple of week periods. I would make money, and then the market would turn, and I would give it all back. This happened a few times, and you learn the same lessons, and then the emotional control comes in. The ones, the one period of time that really that I really learned from in those phases is the end, when all the stocks go straight up. If you don't understand or if you haven't internalized the cycle yet, you just give it all back. It's just it's awful because stocks go straight up. You're like, oh, I've been waiting for this. Coolant Maggie says you only need to, one good period in your life and you double your account, whatever. And you just keep pushing. You're like, this is it. You don't really think about where we've come or where we're going or what the stock behavior is or where it's likely going next. And that is these usually end in blow off tops. Everyone's all excited and there's too much greed. And eventually it ends terribly because you give all your gains back. As quickly as it goes up, it comes down as well. Yeah, so that's on the sell side and keeping your gains that's always the part that makes you feel terrible because you're making all this money, you think you finally made it in the market, and then they just take it all back, right? Yeah.
The cycle ends. Yeah. Yeah.
Yeah.
Um, and I want to hear a little bit more about your journey as well, like when you felt like you made that shift into profitability, and then also your ultimate decision to join the USIC and kind of your motivations behind that. So, yeah, take me back to the past few years, kind of, and how you felt your progress was going during that time.
Yeah. Um, a lot of it was what I just mentioned, and it was that so first 6 months where I was still deep diving everything and learning all the basic materials, I think I made losses. I did make losses. Um, it would have been like negative 20 or 30%. And then every year after that, or from that period on, it was always in the it was always in the green. Um, but there was a lot of up and down, and it was
Up
due
boom
to
and
those
busting.
those cycles.
Yeah.
Yeah, exactly. Um, so 2021, yeah, okay, so this would probably be a good time to just go over the cycles that I've been through as well. So 2021, January, February, I remember being really good, but I was too new and I didn't know. August and September, so that was about 6 months in. There was, I think, approximately around that time there was a new cycle, and I started to see some progress there. And that's when I decided to start a new account and just start afresh. And that's sometimes it's a good mental hack just to let the
Hmm.
past go and start afresh, consolidate your learnings, and just be like, okay, this is it, this is new. Um, yeah, so around that time, that was another cycle. Then we October came, November came, and we entered the bear market. There was a run in the oils. I didn't participate in that. All I saw was a bear market. There were these, so you would get what would happen is the market would go down, and then you would have these reliefs, one, two, and maybe
Few
a third
weeks.
leg.
Yeah.
Yeah, yeah, but each time you didn't get these 2 month long runs. You got a couple of weeks, and you would form one leg, and you would expect the next to go. You would buy something and it would go down. Um, by some miracle, I didn't lose any money in 2022. But what happened? Yeah, I think I did trade some of the oil stocks, which are really difficult to trade with how aggressive I am and the entry tactics that I like to use, which is to use tight stops and buy into strength. Those guys you buy into pullbacks, you use the weekly charts, and you just you got to go small size, and then you got to have wide stop. It doesn't work for me. But anyways, I think I had a couple of good trades, maybe natural gas or something like that. So 2022, that was pretty much a throwaway year. 2023, I think early in the year there was some mega caps, but May and June I remember being really, really strong. And that was more for our growth style. And there was like quantum computing, there was things like this. First year back after the bull market, I was really excited and I thought I'd kill it. I didn't have those lessons internalized yet. And that was just atrocious. I was like, okay, I can't blame it on the market now. Um, I'm really gonna kill it here. And I just overtraded my ass off, and it was terrible. It was really bad. I made a bunch of money and then gave it all back, right? Um, and that was really, really depressing. I think that was like rock bottom. Everyone else is making money. It's the start of you think possibly the market's bottomed and we're going into a bull run, and you've been waiting for this for 2 or 3 years. You start questioning you start questioning everything, and it doesn't work out. And where it really came together is from November onwards. Um, Yeah, I think I could see that the we're coming out of the bear market and we're in a secular bull run. It's just the start. I also had my kid on the way, And so I was thinking, this is my last chance to kind of push it. At the
Hmm.
same time, I also was exposed to some, I would call elite traders. In reality, they've been trading the same time as me, but they're making double or triple what I'm making, right? Um, yeah, and I could see how competitive they were. I could see that they would talk amongst each other and they would kind of be pushing each other.
Hmm.
And I thought I need some of that competitive spirit. Like at the time, I would be self-deprecating and things like this, and it doesn't help. Like you really want to give yourself as much of a mental advantage as you can, and by talking down on yourself and things, it doesn't help. And so USIC I thought was a great opportunity to kind of push myself, put myself out there. At the time, I was using a pseudonym, which, anyways, but yeah, I thought it'd be really interesting to have my results public and just see how I would handle the pressure of competing against people. Um, Being in the USIC, I think it was, yeah, I got a little bit thrown off in January actually, because I did hit some big gains. I hit some good trades as well with NVIDIA and SMIC. We'll go over them in a bit.
Hmm.
But yeah, I think it got to me a little bit and I started over trading again. Yeah, that didn't help. But after that, I got it together. It seems like a lot of guys on your show have this experience the first time they enter a competition. Um, yeah. Uh, what was the question again, Richard?
Oh, it was more about,
Oh,
yeah,
right.
like your journey and like
When it all
joining
came
the
together,
USSC.
right?
Yeah, exactly.
Yeah. Okay. Okay. Yeah. 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 So this is an important point, actually. Where it all came together, is this November run onwards. Um, because of all the components we talked about, I think a lot of people who are really close and who want to give up really shouldn't, because where it all comes together is where those you have all those things, right? You just need to calibrate it just a little bit to the market and it all comes together. It all really, so before I would have been making maybe 20%, I'd give it all back, right? Now I'm making, so this run I've actually, I'm up 93%, but because I was under $1 million account, it discounted the gains.
Justed. Yeah.
Yeah, it's just the gains. So I think it's up 60 something. Um, so the point is, I was making 20 or 30 and it's up 90. Why? Because I updated the process and I incorporated the ideas of situational awareness. I incorporated the ideas of stock picking as well. I was in the right stocks. So on the gain side, it was magnified. I increased my potential there. And then on giving it back, I gave back less as well. And so what you see is it's not I added something and doubled the gain to 40% or 50%. It compounds. And so I think the thing here is anyone who's got these ideas in their head, they think they have it down. You're really close. You really are close. You just need that one change, and it'll amplify your gains. It's a multiplicative effect. It's not an additive effect. And it's not linear. So
Right.
anyone who's kind of struggling and didn't really make the gains in January or February or from November onwards, just don't give up because you're really close. Yeah.
Yeah, perfect. And yeah, I think that's key. Like just subtly adjusting your average gain versus and your average loss completely changes the equation. And especially the loss side. If you can cap the loss side just a little bit more, like it can dramatically change things. I want to dive now deeper into your process, and I kind of want to leave it up to you in terms of where we start. If you want to talk about the setups you prefer, risk management, wherever you want to start with. But yeah, I'd love to dive deeper into how you actually go
Yeah.
about doing things, and yeah, your preferred process.
Great, great. Yeah. Just to add on to what you were saying about the win-loss ratios, I'll give you my stats first. It's roughly a 20% hit rate. Um, Win-loss ratio, it ranges from 5.5 to the best of times, 5.5 to 7.5, and then in the best, like I'll break it down by week as well.
Hmm.
And in the best weeks, it'll go up to 20, right? 20 above that even. I have 61 unique tickers for the period of for this year 2024. 217 trades, so that's about 3.5 trades per ticker, and that was all for yeah Q1 or year to date this year. Um, what was the next question, Richard?
We're diving into your process, but you were sharing your
Oh
result,
yeah,
your statistics, and just letting you know, it's very interesting because this is actually the most extreme, the lowest win rate person who's talked to me, but that win rate obviously is what's leading to all of that. So that's just kind of standing out to me.
yeah, yeah, yeah. So let me continue on that point. you talked about minimizing the loss, right? And that is really, really key because yeah, uh, if you get into the first principles of how to make big gains, you really need to be big in size. And the way to do that without blowing out your risk, if you do a one hit entry and you have a 1% loss or 2.5% loss, that's how you get big size. But to get big size while managing your risk is really difficult. You got to get into the execution of it. You got to get to the intraday charts and find spots where you can add, where you maintain the same or less original risk, but then you bump up the size. And so that's a really key part of the trade. I'll show you the examples, sort of how I do that. But that also explains why the win ratio is so low, is because every time you try and do that, you raise, like you're trying to, you add size and then you raise the stop. And we're trading really, really volatile stocks. And so it's really highly likely that you get stopped out. And I get stopped out a lot. And the amount of times that I get stopped out and just go straight up because I was too aggressive with size is just ridiculous. And it's reflected in the stats. And then, so that's where the situational awareness comes in again. So I mentioned some nuances. There's another nuance, which is that I break it up into maybe 3 or 4 kind of sub phases of the swing cycle. The initial part is, it feels like a little bit like what we're at now, where things kind of work. You have an entry, it might fluctuate around the entry, you need a wider stop, and it'll drift up higher. I don't really do well in these periods because there's a certain amount of uncertainty and I might get too aggressive and get stopped out. The next part is when it's kind of obvious that there's a theme going on and the market's going up and you can just be aggressive, and then that's when you make majority of your gains. Then you hit the euphoric stage, and then after that, the market takes some time to cool down, doesn't just turn off. And at the end period is when, is when you really gotta, and that's the most difficult time as well to hold off, because you're like, everyone's still making gains, I'm not making any gains, but really you're doing the right thing. Yeah, okay. So I think that goes over sort of how I approach the entries and exits, the statistics, and where do we go next? Where do we go next, Richard?
Yeah, if you want to talk setups and entry tactics and how you
Yeah.
keep that risk, feel free to share your screen if you have some examples that kind of help bring everything together. But feel free to also just discuss it if you'd like.
Okay, so this is the process. We'll zoom in here a bit. So high level, this comes from a thread I put together called system building. Okay, so that kind of puts you in the mindset of what I was thinking at the time. High level, what is momentum trading? We've been through a lot of this already, so it should make sense. 2 to 3 month periods a year of aggressive trading, right? Low win rate, high risk reward. We've talked about that, and only trade outlier leaders. So there's a point I want to make about the statistics we were talking about too, and also how back testing plays a role. But basically, it goes to this point here: only trade outlier leaders, and that means stock picking, right? Key objectives: maximize gains, minimize drawdown, risk reward relationship. Process loop. Okay. Process loop and execution. So this is where I differ a little bit from the conventional thinking. So I think journaling, I think, is really good. People, the way people review trades, I think, is really good. And the way they do that is this: they look through the trades that they made in the past week or whatever it is, and they say, okay, did I follow my plan? Did I follow my rules? Did I enter it opening range high and cut my bad trades at where I defined the losses? That's fine. And they just do that. And that's really good for a beginner because you need to follow the plan that you made. I also have sort of this idea of the principal and agent concept, which is, it's probably worth people going and having a look at, but it's probably not for this. How I think a slightly more experienced trader, actually the beginner should do this too, is they should review the best opportunities in the market. People call it playbooking. And the reason you do this is because if you only look at your trades, you don't know what you're not seeing. Okay, and the most important thing is to be in the right stocks. The things you're focusing on your review, like, oh, did I chase? Did I get slippage of like an extra 0.5%? All that goes away completely if you're in the right stocks. You actually get, I want to be careful with how I say this, but you get rewarded for some of these things like chasing and oversizing if you're in the right stocks in the right period of time. So it's really important in your review that you acknowledge this. You realize that it's not, you need to be, basically you need to be in the right stocks. Okay, so my process is this: the idea is you want to identify leading stocks and you want to identify where we are in the cycle. And then you also want to use the right tactics. It's actually really hard to talk about these in individual terms because they work together. So just by identify leading stocks and how they're acting, you will get an idea of which tactics to use because you zoom in, you say, how did these breakouts work? Did they come back and retest? Whatever, you do this on a weekly basis, on a daily basis to see what's working in the market. And by seeing this over time is where the situational awareness comes in. So yeah, we'll talk more about it in a sec. But then once you've identified how the market is actually working and what's really happening and what the leading stocks actually are, then you go and compare with your executions and you say, did I execute on the best stocks in the market? Did I use the tactics which are working in the market at the time? And I think another concept which is really important here is that you shouldn't anticipate what's going to happen in the market. Just take the market for what it is. Don't think, is the market faking me out or whatever? No, just whatever's happening in the market, that's all we can base our decisions on, and just take it for what it is. I have a rule in here. We'll get to it. Okay, I think we've gone over this part, right? So the feedback loop, you do the execution, you come back to what's actually happening in the market, and that's super important. Okay, any questions there, Richard?
No, I think we've covered this.
Okay, I will go over this in a sec when I show the charts and I show the actual process. This is the journal template we can go over as well. Okay, here. So carrying on what I was just saying, you have a bias going in, okay? So the weekend review, so the process on the weekend review so far is you go through what's moving in the stocks. Did I trade the right thing? And then you need to project forward and say, based on what's happening, how am I going to treat the market next week? What is my bias? And okay, so I mean, what happens if something changes throughout the week? You need to have a system to adjust your bias, right? And so I have here, in the weekend review, I have my bias. If I want to change to a bullish bias in my daily review, what do I need to see to make that change? So say we're bearish, I need to see setup or breakout proliferation in a theme. It's very helpful. So a recent example is the China stocks. On one day, they all gapped up and just went up. The next is a news catalyst, thematic, or EP. And so an example would be the weed. There was a regulation change in Germany and also in the United States, and that caused some big moves. They weren't sustained moves, but they were enough to trade. They were really big moves, actually. Another is an economic catalyst. So in week 17, 2 weeks ago, you would see that there was some news release, like a kind of stagflationary news where the economy was a little bit weaker, and inflation was a bit higher, and the market didn't respond negatively. Actually, it went up, and so that's another sign. And so this is turning from a bearish to a bullish. Just some examples. I think there might be a few others, but these are the main ones. Then turning to a bearish bias. Say we're in an upcycle, we're in that straight up market, and then what do I need to turn bearish or be more cautious? Significant distribution day. So it might be that we're talking about the market here. So stocks go up, you buy breakouts, and then they just reverse really hard or on volume after day 2 or 3 or even after day 1. That's a significant sign. You got to be a little bit cautious here because if you're in the start, like we said before, if you're in the starting few weeks of the straight up market, it might not be as significant. People might just be profit taking. So it's a little bit discretionary there. You might have 3 days of full stops. So that was the market. This is now talking about my own trading. Am I calibrated to the market? If I'm taking stops, it means that something's wrong. So I just need to take a break. It might not be that, like I say here, you go bearish, but what I just mean is that you're not as bullish as before. You got to reassess. So if I'm taking 3 days of full stops, or I'm taking, say, 3%, like I'm taking 3% drawdown, something's wrong, right? Now, the case may be that I might have a portfolio of stocks that's continually moving up, and then it's the new positions that are giving me trouble. In that case, I won't sell everything that I'm in, but I'll reassess. So it's a little bit discretionary there as well.
Right.
And then what else do I have here? More breakdowns. Okay, so this goes more breakdowns than breakouts. So I'll show you in a second. I have a back watch list, and it's sequential over time. And so I'll look at that every day, and I'll see how past breakouts have been working. And one of the criteria is that, yeah, are there more breakdowns than breakouts, basically? Yeah. So that's how I think this is worth emphasizing is that a lot of people, if they don't have a process, they don't have the data, they will get into this loop in their head of maybe the market's going to change. Uh, like I don't know, this seems wrong or whatever. You just got to listen to what the market's telling you and just follow it. Okay, it might screw you over, but in the long run, over many trades, you'll be all right. This is the right thing to do. So I might change bias one day, I might get screwed, and then I might have to reassess, right? But if you are consistent in your actions, at least you have a process that you come back on and say, okay, I was wrong here. Was this due to luck on like 1,000 trade time frame? Will this work out? And
Right.
if you follow this type of thing, there's two benefits. One is the answer to that is yes, and the second part is you're mentally at ease. You're not second guessing yourself, or if you are second guessing yourself, you're doing it in a way which the data backs you up, and so you're not stressing about it. Right? You have the solution in front of you. You can implement it. You can go to sleep fine the next day. You wake up the next day, and then you implement the process again. Right? Okay. Any questions there?
Yeah. Will you will you flip from bullish to bearish faster than bearish to bullish? Like, is there kind of a little bit of a difference in your mind with that?
Yeah.
Yeah.
I'm thinking of a few examples. So, um, in week, let me think, in week 10, yeah, in week 10, Nvidia and AMD topped. Um,
With the big
and
reversals.
I put the brakes on really hard, and I think I left a lot on the table there.
Mm,
Um, that's something that I'll carry forward. And the reason I think I did that is because of those experiences in 2022 when you would get these couple of week up cycles and then they would just reverse really hard. And I think I was conditioned from then to, yeah, to put on the brakes a bit harder. I think because of where we are in the cycle, it might mean that things continue to drift up. Maybe not in the big stocks, maybe in the speculative stocks. Um, but that's something I'm looking at. The original question
mhm.
is, am I more, yeah, it depends on the cycle. So am I more aggressive on turning bearish or turning bullish? I think I'm more aggressive turning bearish because like it's kind of obvious when it happens. You get a lot of red flags and you can see it coming if you're like following a process and you're detailing these things. A turn upwards is kind of less obvious to me. And the reason is there's no defined trend yet.
Hmm.
Like you might be in chop, and it might be an EP season, like an earning season that triggers something. You can see that might be obvious, but if you've just had like we have had now a strong season where things need to cool off, and you're just looking for like what Kel we call a wedge pop. I find that a lot more difficult because you have all this overhead and
It's more
yeah. So the
ambiguous.
answer is
Yeah.
exactly it's more ambiguous. So I think I am more aggressive on turning bearish. And the reason is because of my past experience with the 22 market. And also, I don't want to give back gains. And I'm perfectly happy to get aggressive to stop and hold on to my profits. But I'm not so aggressive on, what people call progressive exposure, right? Um, yeah.
Yeah, I think that's a good answer because it's a tough the transitions are the toughest and it is a little bit more obvious with the reversals and breaking moving averages as stuff is like topping. But I was talking with Ray about this earlier. This kind of ambiguous period. It's often where people, chop themselves up, and then they're
Yeah.
not in the mental right frame of mind to really hit the gas when the trend becomes more sustained and stuff gets tighter. Things start, following through all of that. So this is this transition where we're kind of in. We don't quite know what's going to happen. It's a tough period. And even if you're got a bullish bias, I don't know. It's just kind of tougher in my mind
Yeah.
as well.
Yeah.
Yeah.
Yeah. I agree. I agree. We're on the same page there. All right. Let me see here. Yeah, so this is just a breakdown of what I've talked about already is like
Hmm.
the sub cycles and also the details of um I think we have pretty much covered all of these, so I'll just let people read them in their own time.
Yeah. And by the way, for
Um,
everybody watching, we'll link that thread down below in the description. So and as well as your Twitter, so people can find this really easily. But
yeah,
uh,
cool. And really happy if people ask questions. I really love talking about these type of things. And if people ask questions, I will answer everybody. Yeah.
That's a bold claim. You don't quite know the rush just yet, but
No, I
uh,
don't have 100,000 followers, Richard.
yeah. No, this is good. And yeah, definitely ask questions on Twitter as well as in the comments here. We'd love to hear it. All right. Did you want to come back to your routines here? We skipped
Yeah,
past
yeah,
that.
yeah,
Yeah.
yeah.
Yep.
Okay, I'll show you my charts now. Okay,
Yeah.
so this is I use two charts. This is something that a good friend of mine has built,
Hmm.
and I think Richard, you'll be really interested in a lot of the stuff that's in here. So I'll spend some time going through this. I also use, and this is how this is if ideally if I could have it, this is how I would have it. I have these moving averages. Um, to it's a bit messy here, but basically I have this cloud between the red is the 50, the yellow is the 20, and the purple is the 10. And the way I have it is the SMA and the EMA, and then I have a cloud in between because
Hmm.
you never know which one's going to work. And it's not like everyone talks about, it's not an exact point. But sometimes I find some stocks respect the EMA better, some the SMA, and that really works. Then other critical details I have, like let's just pick a random stock. Yeah, okay. Um, I'll have it in this dual screen mode, and then I have price to low of day here, which is really important for me. We're talking about how tight the stops were and the
Right.
size that you can get on. Then we have the percent of ADR. Like I don't really look at that because it's like it's obvious that you're gonna get in before like a 1/8 ADR, and if it's extended, you're just gonna ignore it anyways. Higher day to lower day. Yeah, so if the market's really busy, I might use a limit buy with a limit stop below it. And so that's where I want to know, like, okay, if I buy it here, am I too extended? Am I going to get a tiny position? Do I need to look at intraday a little bit more focused, trying to find VWAP entries or like pullback entries? So that's that kind of stuff. What else do I have on here that's interesting? Anything that stands out to you, Richard?
I mean, it's all interesting to me, but I guess
Ah,
taking a step back for a beginner trader, what are the
okay.
most important things on your screen for you that there's some stuff that you might use 5% of the time. What's something that every stock you analyze, you kind of go through that process, or if you're looking for an entry, you use. So you mentioned
Yeah.
VWAP a few times, so maybe it's worth diving into an intraday and talking about that at some point.
Yes, yes. When I go through the examples, I'll definitely go through
Cool.
that. The most important things, I think these 10, 20, and 50 for me are kind of important just to gauge the trend.
Hmm.
Um, the actual shape of the chart, like I don't look too much at whether or not it's sitting on the 50-day, it's within whatever, because day to day when you do your process, you're gonna see how the stock responds to the environment. You're gonna compare it to the other stocks in the market and you're gonna see which one's stronger. I
Hmm.
don't really think that you can gather that from looking at where it sits to the like 20 EMA. The thing that might be interesting and the thing that this does show actually really well is that if you're in a downtrend, or you're coming off very steep angles, these the EMA and the SMA show this range, which
Yeah.
I think are really interesting. So this here, like this period that we've just been through, it shows a wider range because we've had more volatile action, and that can be like it can be interesting to think about. And you can see like it rejected here, and it was within both. It was sitting above one. It was so that's something that's interesting. So the moving averages are important. The For execution, this number is important.
Yep.
It's important to get size to gauge whether size. This is also important ADR, so you wouldn't trade this 1.5 ADR. It just doesn't make sense if you want to move your account. It's it's a matter of opportunity cost. When the stocks come up, I will try and prioritize the stocks that I think can move the most. So people say, "Oh, do you trade 1.5 ADR stocks, like 2.5 ADR stocks, whatever?" It doesn't matter if they are the only stocks moving in the market at the time. I will, but the stocks that will move the most or can move the most or have the highest ADR get priority. Then I have here average dollar volume. That's just important because now I'm moving a little bit more cash than I was before. If the stock's too illiquid, I'm going to move the stock. Um, then I have the float as well. So sometimes if I'm not trading these really big stocks, I'll be trading some bottom of the barrel stocks. And it's interesting to note what the float is, because if you get float rotation, it can mean certain things. So I compare that number with the volume. Yeah.
Hmm.
Sorry, I've gone on a huge tangent, Richard.
No, this is good. You were mentioning, how you use each of the different charting softwares. So
Hmm.
Yeah.
Yeah. Okay, so that's how I use this trading view chart, and that's really kind of my ideal setup. Then I have my daily chart that I use. This is what I use for executions too. So yeah, just to give a high level overview on this. Yeah, well, let's just go through over my daily process. Let's do that. All
Yeah.
right.
Sounds good.
So it's the morning for me, and so I haven't looked at the charts yet. So this is exactly what I would be doing. So um, okay, first thing I do is I open this up and I look at the watch list. This is my watch list from yesterday. I don't go into the day with all this stuff in it. And if the market's kind of in transition, I will also have more on here because I'm just trying to take a gauge of what's really happening. The stocks that I might want to execute on would be closer to the top, or I'll know where they are. First thing I'll do, I'll look at watch list. I go into this grid mode here and I just have a look overall, how have the stocks been going? So this will tell me a couple of things. This will tell me whether or not the stocks that I'm picking are calibrated with what's actually working in the market. And it just gives me a really quick overview of when I went to sleep, what happened when I woke up. We were talking about bearish and bullish changes. If I went to bed, things were red, and then I woke up, it was green. It's green. That's usually a pretty good sign. But yeah, this is the first thing I'll do. So just looking here, what I see is a lot of this stuff, like the Bitcoin names are down. I have the QQQ here. Third day up after a gap up over the 50. That's expected behavior, right? So nothing. If that went up, I don't know, 1% or something, I would be like, okay, this is crazy. We're back in the market. We're approaching the tops here. It'd be great. If it was down a lot, that's also abnormal behavior, and I would make note of that as well. And I would be like more of a bearish stance. But this here is kind of normal behavior, and I expect to chop around the 50, right? What else do I see? So yeah, we pretty much had tight closes, which is interesting for me going forward. This is kind of where I get a little bit more interested as well, because it gives you more it gives you like a tighter risk entry. The other thing I'll note too is like past couple of days, what I've been seeing is really illiquid behavior. Like if you're sitting there in the market and you're watching these things, the first 30 minutes goes so slowly, and you see the spreads really moving around a lot. So it's a lot of these things I'll be watching on, like I'll turn on the 3 minute and I'll start watching them on there because it all gives you information, right? What else do I see here? So Google went up a lot yesterday. That might signal that there's a trend in the mega caps. Who knows? Let me see here. So we've got some medical stocks. This was a potential EP yesterday, and this chart here reminds me of VKTX a few months ago. You know, like I don't know, sort of here-ish, gapping up to all-time highs. I'm looking at OSCR, and it didn't respond the same way. Like I'm taking note of that as well. So okay, it's clearly not February anymore. What else? Like I'll see COHR that was reported yesterday, and it didn't react very well at all. So it's a semi kind of data center related name. That tells me something about the data. So okay, so the point is that everything that I see here gives me a little bit of a hint of what's happening in the market, right? So like look, A-Lab is another semiconductor name. I think it reported yesterday, and
I don't think it reported. I think that's not until May 27th, but I could be wrong. I'll take a look right now.
oh, okay. I think I saw a gap down on it. Maybe it didn't report. I don't know.
There was a gap down maybe along with SMCI when it reported, but yeah, let me take a look.
Oh, okay. Um, all right, yeah. So I'm just going through. So here, first thing I do is look at the watch list from yesterday, and I'm kind of seeing, okay, so like China names, QFin. All right, so I think of a fintech is Futu. Futu. Yeah, and so that broke out of a similar kind of thing, and it's holding fairly well. QFin. Yeah. Okay, so this is basically what I do. You see Crocs here yesterday when I was awake, it was up a lot and it closes halfway down in the range. If this was November last year, it would be straight up. And I'm also looking at sort of the highs here. There would be a trend line up here. That's where you would expect resistance. Here I have a line through recent highs, and you expect that to hold, which it did. So yeah, these are the things that I'm looking at with the watch list from yesterday. Okay, that's the first thing I do. The very next thing I do is I start going into review of the actual market. So this is my own calibration, my own selection. Then I go into a gain one scan, which is basically just the biggest movers of the day. And I'll go through and I'll see anything that makes a big move, either that looks like a stock and play EP, I'll bookmark it, which means that I just take note of it. I put it in a separate watch list. So even anything like Peloton, Root, so that's sort of a breakout from a low range of pullback kind of buy.
Hmm.
Sim, yeah, what else we got here? EBS, yeah. So this type of move I would take note as well. It's not really a breakout, maybe it is a little bit of a breakout, but I'm pretty loose with what I bookmark here, right? The idea is just to collate everything that's made a big move so that I can assess in the next step, which I will show you. So Crocs, I'll add there, right? So, okay, next step is I go into what I just collected, okay? And I'll go here into the bookmarks. And this is a back watch list, okay? So the back watch list, what this is a sequential record of all the breakouts that have happened. And this is the truth of the market here. And there's a lot of detail in just this one process because it shows you the number of stocks breaking out. That gives you a feel for something. It tells you the follow through that's been happening in the past couple of days. That tells you something. It tells you the relative, how many stocks have been breaking out relative to the past couple of days. It tells you if the breadth is moving up or down. So that's a problem I have with the breadth indicators. They can be pretty good at the extremes because when the market gets correlated, everything's up or down at the same time. But if you have like in the middle range and you see like a 200 or 300%, 4% update, how do you know if those are the stocks I'm even interested in, or how does that really relate to my own trading? It doesn't. So, well, it might, but it might also not. But how do I know for sure is to track these breakouts here. So I'll just
Hmm.
go through a couple of pages. These blue highlighted regions are the breakout day. So I just added a few now, but if we go back into the past, look, so I have here what? So we had Mara was extremely strong yesterday and it's going sideways today. Relative to what Bitcoin is doing, that's really strong. I take note of that. Fix, so these kind of construction, I think they're related to data centers and HVAC. They're working. I think mod was another one. So if I think of something, I'll just go here and say, okay, look, mod, that reminds me of this. Yes, it's
Yeah, it followed
following
through today. Yeah.
CEG. What's that?
Oh, just saying. Yeah, it followed through today. Mod.
It followed through today, right?
Yeah, I was looking
Exactly.
at that earlier.
Yep, yep. And so you look at just how breakouts have been working. So then we look at copper names, and that looks like a breakout, infamously choppy. They made a huge move. I missed this, and so it's in my mind. And I have FOMO about it. I'm tracking this as well. One of my theses is for like they kind of growth stocks and commodity stocks sometimes they move in opposite. So it's really interesting when you have a strong move like this, and we're in a stage where we are now you can game plan for both ends, and it's really exciting because you either have something that goes up, which is the growth stocks, but if things go down, you can also look at these commodity stocks. And the third option is that we just chop, and that's. Nvidia was another big one. So this was a big day here where it broke out, and yesterday it didn't follow through. I think there was some news about one of the other companies making chips. Um, mhm. So this is the process that I go through, right? So I'm looking at, okay, now we're into 3 days ago. 3 days ago, GME went up big. And after a big move like this in a downtrend, okay, you would expect that you look at all these moving averages, it hits, you would expect that it reverses and it goes down. It's been holding up. So this is interesting to me. It doesn't mean I'm going to trade it, but it's something that I'm keeping note in the back of my mind. And the compartment that it's in is the bottom of the barrel stocks. And so I'm keeping in mind if this can hold up, maybe it can spark something in the speculative phase. We haven't really seen the fundamental stocks go, and it doesn't follow that archetype of what I've seen, but I'm making note of this. It's all information. Yeah, so what do we got here? This is a fairly nice breakout. It followed through. So it followed through, but it followed through 6%. Okay, and the calculation I'm doing in my mind is we talked about margin of safety. If we're talking about margin of safety and breakouts, what I really want to see to get really, really interested is lots of 20% moves. And where does that 20% number come from? It comes from, let's say I get a 2.5, 3% stop, 3% stop, 3R on that is 15%. I'm not going to expect to catch all 20% of the move. If I screw up the sell, let's just say 15%. So I want to hit sort of a 20, 25, 30%, the higher the better, because it tells me that I can not only try a stock, it'll go up, it'll pay me for my mistakes. But if a stock's going up like, 7%, I don't have confidence in that, right? And it doesn't give me the margin of safety I'm comfortable to keep my account moving upwards. Yeah. Yeah, and so we just go down the list. So now we're up to the sort of, well, this would have been last week. I can't remember, Thursday or Friday. Yeah, we got all these China stocks going. We have an EP here. ASBNs was a really good one. Anyways, okay, so this is the back watch list. I think we've gone into enough detail about back watches. Next thing I'll do is I'll move these stocks. So I'll just highlight these, for example. They might already be in here, but I move them to a leaders list. So leaders, I'll go to leaders here. And this is the same back watch list, but instead of sequential, it's sectors. Okay, so if you think about the levels we were talking about before, the backwatch list probably corresponds to the situational awareness level, and this corresponds to the sectors and themes level.
Right.
And the combination of these two, like we've talked about one scan, which is the gain one scan. We've talked about a backwatch list and a leaders watch list. With just these tools, and if you just intensely focus on these, I think that this can produce a majority of really strong results. Anyways, I'm talking about the people who go through and do like 5 scans or whatever. I really don't think it's necessary. If you really focus on, you think about what momentum stock is and what you really need to focus on, all the details that we've just been through. If you really focus on those, I think that you get a lot more information than if you do like 10 scans where your brain's half turned off, right? So yeah, so I'll take the breakouts from today and I'll just copy them into this list. Yeah, so we had a few added and it goes into new tickers. Then I'll go through one by one. And so what do we have here? So I haven't seen this before. FMC, it's a chemical diversified. I don't really have a list for that. But then yeah, I'll just leave it here if I haven't seen it before and I don't have a category. But if I do see 2 or 3 of these start popping up, then I'll add a category for it. So I've got like space, potash, water, and then I'll add them to that. Then I'll go through and I'll reorganize it. So it's hard to see here, but if I go into a weekly chart, I'll start looking at which stocks are the strongest and I'll sort them. And this is really important because like I was talking with stage 1, you start comparing the stocks between each other. And yeah, and really often the stocks that are the strongest. Like the reason I had this here in the leaders watch list, and what you'll notice too, is if you only had the back watch list, you'll notice that the stocks that went up first are usually the leaders. And if you go through those again, you'll see setups. So throughout this process, I'm also collecting setups and focus list names for the next day. And so, yeah, so that's how this works. Let me see. Yeah, and so it's important to also compare the stocks against each other each day, because then you're doing that relative strength thing in your head. You don't need the relative strength number. You'll just internalize it this way. And then as you go through the sectors and you rearrange them by sector, then you will also compare the sectors in your mind to see which one's the strongest as well, right? So that's how things get on the list. How things get off the list is if they start breaking down or, yeah, like, so COHI here didn't really work out, but I'll keep it on here for a day or two because sometimes after a big shakeout, you can get a really big move. Look at VRT the other day, right? So these are the kind of the details of how I manage this watch list as well. Okay, so let's see, what have we been through? We've been through the gain one scan, we've been through the back watch list, we've been through the leaders list. Okay, so the next step is to go through the back watch list, which is here, and then I will bring up here the journal. So where are we? Here. So I just have it here in a server, a Discord server, and I'll just have the template. And the way I do it here is, yeah, how this originated is I try and playbook all of the stocks, but I tried to do that at the end of the week, and what I found was that it's just way too difficult. It's like you go back and you try and look for the catalyst, and I'm just super lazy, and it just doesn't work. So what I started doing instead was taking note daily, and I find that this works really well. It works super well because if you find something that you can do that's simple every single day, you'll pick up on the nuances, and it will be much more helpful than, you know, if you do it less often or you find something that you can't stick to, it's pretty much useless. If you find something very simple, like what did I just tell you? I told you I do a 1-day scan and then I just list the strongest stocks, right? Yeah, so the next step is to list them here. So what I'll do is I have Monday to Friday, I have a template here. I'll also go to Forex Factory on the weekend, and then I'll put in all the significant, like the red ones you'll see, and if it's related to the USD, like a Fed meeting, then I'll put that in here. And that can be important. So yeah, so I'll go back to the back watch list, and any of the stocks that came out of a setup, okay, I'll put in here. So you recall that any big move, I put in the leaders watch list because they could set up again. But here I'm only looking at stocks that were kind of buyable, and it's a bit discretionary too. So we're talking about like a 20% kind of move, or a stock that came out of really nice flag, a really tight flag. I'll be a bit looser if the market's, if we're in the backside of a bull cycle. Yeah, but if we're kind of at the start, then I'll be more sensitive and I'll add anything that kind of looks like a breakout. So this is from Monday. This is already two days old. But what I see here, okay. Firstly, I don't highlight anything. It's just the way it is here, right? There's no bold, there's no nothing. I'll note that Nvidia broke out. Okay, so in my mind, I'm thinking semi stocks, right? Then we have this oil, China. This is the EV mod, we talked about this before, as a data center, CIWG, so we're talking about security. And Alaskan idea might not NUGT, which is really interesting that it went up on the same day that kind of growth stocks did. So you got a correlated kind of up market. AAL, so I'll look at something like this, AAL, okay, and this is the type of thing that I'll make note of. If I'm only looking at AAL and I saw this, it looks like crap, right? Like you're not going to add it to the thing. But because UAL has been strong, I'll add it to the list because it gives you information about the sector, okay?
Mm-hmm.
And then I have this listed under pullback, sound and CXAI. So let's see, sound. This is a pretty bad looking chart, but it went up, okay? So it's not really a setup that I follow, but if I start seeing a lot of these, then you bet I will trade these, all right? So this also went up a little bit, it reversed yesterday. Okay. Okay, so that's during the week. Then on the weekend, I'll get into the best opportunities. So this is where the playbooking really happens. So I'll go through each of these. By the end of the week, a lot of things will change, and then I'll go in here and just edit. I'll go and edit, and then I'll highlight the ones that I think are the best opportunities for the week. I'll put them in here. That's the first step of the filtration process.
Just real
Yeah,
quick, EP is EP, breakout, pullback. What's BD stand for?
BD, breakdown.
Breakdown. Okay.
Yeah, breakdown. Sorry about that. Yeah.
No, no
So
worries.
these definitions are also really loose. So EP is a it's not like EP has a defined setup. Pradeep has this thing. It's more stocks in play, stocks that have a catalyst to go up.
Gotcha.
Breakout, pullback, and breakdown. So breakdown will be the opposite of the breakout, obviously, and a pullback will be a pullback buy. The reason I have these like this, and sometimes I'll add, if there's a separate theme, like EPs going on the second day, I will also add like EP2 or
Mm,
or something like that.
I like
And the
that.
reason I have these is really intentional. There's only really a few types of setup in the market. I found that before a run in the market, you get a lot of pullbacks, so pullback buys. So DDOG is one that sticks out in my mind. There was one stock that went from an undercut and rally, and DKNG. That's the one. Sorry. Yeah, DKNG. So you'll see that it went up in November a lot. This was one of the first to move. And then after January, we had a steep sell-off at the start of the year. And then this was one of the ones, a pullback buy, which if you look at this, you have this range here, and
Hmm.
then it pulls back here, and then it goes, right? This is not really a setup that I trade either, but if I see a lot of them, I go. This was one of the first ones to kind of go at the start of the year. I didn't take it because stocks weren't working. My bias was on the opposite side, but you would see that it kept going up and kept going up, kept going up. I think recently here, it also went as well. So the point I was trying to make is that oftentimes after a quick pullback, you'll see pullback by setups go, right? If you're only looking at buying into strength and breakouts, you miss these subtleties in the market, which will tell you that, okay, like things happen in sequence. This is okay.
Yeah.
So this is one of the things that I learned from Kulamagi. He has these three setups, right? He has breakouts, which is buying into strength. Then he'll have these mean reversions, which are pullbacks on the long side or the short side. And then he has the EPs and the stocks in play. And so what he doesn't talk about is how they're strung together and how they form the price cycle. Usually a stock will start off with an EP or a strong catalyst, and it'll just have continuation trades throughout as a result of the initial catalyst. And then if you have a real momentum stock, if you have a real momentum stock, if you have a momentum stock, it may end up in sort of a parabolic blow-off move, which is a sell signal. It's also a short entry signal.
Hmm.
But then on the way down, it can also set up for a long signal. So what I'm trying to say is that you have these three setups. They don't they're not in isolation. They can tell you something about what's going to happen next, and that's what you
Right.
should have an expectation in your mind. So that's what I'm going back to what we're talking about here. The reason I have these three is I have an EP which starts to move, a breakout setup, which is into strength and continuation, a pullback, which is the next logical move in the cycle. You might have a pullback after a strong move, and then that'll initiate the next stage of the cycle, and then the final is the breakdown. And so that's kind of how I have these laid out here, Richard.
Yeah, makes
Okay,
sense.
so yep. I will also go over. So we're in week 19. So let's just talk a little bit about how this works. So you've laid all these out. You've highlighted the best opportunities of the week. There's a couple of different functions here. So Richard, please ask any questions or stop me if I'm not clear.
Hmm.
The first is figuring out what the best opportunities were. The second part of it then is to identify any themes. So we go back to last week and we started seeing there's a whole lot here, right? We started seeing a lot of action. We have here, what do we have here? We have a lot of economic releases. Like last Wednesday was just a crazy day. Look at all
Hmm.
these, um, and then we also have a lot of moves in stocks. Now, I see what you see here, which is a bunch of like it's just a bunch of words and tickers. It makes no sense. Based on what happened in the week, I'll also go down and break it down. So I'll go through, list the best stocks, highlight the ones that were the best. All right, I'll list them here. So that's one level of filtering, and I just in my mind, I see it clearer. If it jumps out at me straight away, then I'll leave this next part. But in this case, it was the first time in, I don't know, like a month or two where I started seeing some strength, and I wanted to be on top of the sectors, and I hadn't been tracking as closely as I should have been, and so I have these sectors. I'll break this down further into sectors. So then I have these names here, and I'll
Hmm.
use this bold to kind of tell me which sectors I should really focus on. And in these cases, these are the breakouts which I feel like I should have been in. There's enough information there for me to reverse engineer how these moves should have worked, and I should have been in them. So these ones here, I know in my mind that this was just a one-day move, so it's not really a swing type thing. I'll make note of that. Then there's a lot of these sort of um, biomedical related stocks. Then we have a lot of these data center AI related stocks, these materials and things. The restaurants were strong 2 weeks ago. And then I have sort of these other stocks here. China was another big one for last week. So I'll try and break it down until it gives me some information about how I should proceed next week.
Hmm.
So I'll break it down further here. I say that the playable stocks and the sectors I think I should have been in were here, this weed sector, and also like a dartboard list of Chinese companies. I could have bought any of them and they would have gone up, right? Okay, so like we're talking about my process, this is really the meat of the value of this process because
Right.
you know what happens in the stock in the stock market, right? And then only then do you go and run the journaling process, which is where most people start. I didn't take any trades, but if I did, I would be saying, was I in any of these highlighted stocks? If I was not, why? Was it possible? Was there a trend last week or a couple of days before, which gives me a hint as to um, whether or not I could have been in these stocks? Yeah. So for the marijuana stocks, the news hit, all the stocks just went crazy. There was huge volume. And if you were there and the alerts hit, you probably could have taken them. You probably could have even chased them because the the catalyst was so strong and then sell at the end of the day. In hindsight, of course, you might have trailed and been stopped out the next day. The China stocks, they all went on the same day. They were all gapped on one day. The futures were up, and there was also like a news failure a little bit before, which should have had your antenna up, and you could have said, yeah, I could have taken these. In my mind, these two were the best because they also have some fundamental backing. Like BEKE is, I think it's yeah, it's like a monopoly or an oligopoly in the property market. And the big story about why China is rebounding is because, yeah, consumer confidence, the policy has changed in terms of the property, right? So that's one. The next one, that's real economy side. And then the stock side, you have Futu, which is, if the stock market goes up, we have a bottom. Yeah, it's kind of like coin. With all the speculation, you get blowout
Right.
results. So that's kind of where I'm looking at those. But really, you could have bought any of these. PDD has been, relative strength stock in the ADRs for ages. Baba is a value name or whatever. So this is kind of how I'm looking at, yeah, the strength of the market, how I traded, and then how I'm calibrating for the next week. Then the next part is where we close the loop and we say, okay, this is how I performed last week based on what I think is going to happen. Then I have next week's game plan. Okay, what stocks were the strongest? Was I able to get ahead of them? On average, so this is really important. On average, what is the expected value? If I took all of these stocks, like you don't know which one's going to work, right? So if I took all of these breakouts, on average, would I have made money? If the answer is yes, like you don't need to know exactly what the expected value is, but if it's above zero and you're like, okay, some of these moves made 20%, it was more than half of them, I'll probably make like all of my losses if I took all of them. That's a really good sign. Okay.
Hmm.
So that's step one. The second step is, was I calibrated? Did my stocks calibrate with what was actually happening in the market? If the answer is yes, it's a really big green sign. My bias will be positive next week. And then the third thing, which isn't really shown here, is whether or not there are a proliferation of setups which I can kind of trade going forward. And if all those boxes are ticked, then I'm pretty bullish going into the next week. And so I'll have that listed here. So what did I have here? So this was 2 weeks ago. Let's see how good I was coming into this week. No major economic releases this week. Right. Focus on stocks in play and EP. This season hasn't been great for them, so that's in the back of my mind. There have been a few TMDX, what's the other one? Yeah, that have been good here, ASP and Aspen. Breakout's more likely to work now. Yeah, so last season, there's trends with this too. Last season, EPs were really strong, and breakouts really were not that great. You think of NVIDIA was a breakout, that's great, but overall, they weren't that strong. This season, I'm expecting the opposite, because if EPs aren't really strong, the attention really isn't on them, or there have been really strong kind of results, they get priced in over time. On the actual result day, nothing really happens, but then I'm watching for a delayed reaction.
Right.
And so that's pretty much what a breakout is, right? Now we're kind of talking about the stock move as a continuum. We're not really talking about a setup. We're talking about where it is in the cycle of the momentum stock archetype of the stock itself, right? And then small size. So we're coming out of, let's see, I stopped trading in about week 10. It's now this was week 17. So 7 weeks. I was just coming back in. And so I'm saying small size. The small size to me is, I'll show you in a sec, it's 0.15 percent of my portfolio risk.
Hmm.
Yeah. So this was last week. The other things that are really notable from, what is this? Yeah, last week is, if we go back another week, this is the first week that it was really interesting to me, week 17. I won't go through all this, but most important things here, I've a bolded here. Tesla was a news failure. Okay.
Right.
What a news failure is on a downtrending stock, everyone's selling, everyone's shorting. You get really bad news. This line here is earnings, and the stock went up. Now you also have a Wyckoff's ring, oh, sort of. You draw this line, it broke down, it failed, everyone got shaken out, and it gapped up and it went higher. Okay, so after when the weakest weakest stock in the FANG or whatever it is, Magnificent Seven, does this, you take notice. Okay.
Hmm.
So that's one sign. Then the very next day, you had this stagflation number, which we talked about previously, which is weak growth and high inflation, stagflation, positive news failure. Similar concept, but here in the indexes.
Hmm.
We had this big, massive run, and then you had a bit of a sell-off here, okay? And then I think it was this day, possibly, this day. Anyways, you had this bad news and the stock went up. So the market went up. All right, so that's a signal. All right, you had all these weeks of selling, and the stock went up. So the market went up. So that's a positive sign. And then last week, that information was reconfirmed because you had similar numbers. And then in my mind, I'm thinking this is the level and this is the story that this level tells. And we held it here.
Hmm.
Right, so that's 2 weeks ago. I started being more positive on the market, right? So that's how this generally works. Sorry, Richard. Oh man.
No, you're good.
I hope that all made sense.
No, I think it's really good. You're basically, keeping track of this. It helps inform you about, what are the themes? What are both in terms of the groups, the themes that are strong, as well as the technical themes that are strong right now, EPs versus breakouts versus pullbacks, all that, and that informs your situational awareness. I think that's great. If you don't mind, let's jump to some trades because I think that helps bring
Yeah.
everything together. This is kind of the setup, how aggressive you're going to be, what areas you're looking at, and then there's kind of the execution side of things. So let's jump to that, and I'll definitely have some follow up questions regarding
Okay,
these.
great. So let's jump into it. So on this software here, I have all my trades. I will walk you through my biggest trades of the year so far. And I'll try and do it sequentially because it tells a story as well.
Hmm.
Um, okay, so Nvidia. This is kind of the stock that yeah, it sparked the flame in the market. So where are we here? Let's see. We are okay. I think it's let's talk about where we are in the market first, right? So at this period of time, here, let's go to the QQQ. Okay, if we zoom out, um, yeah, let's go over what the swing cycle is. The swing
Hmm.
cycle is basically this. So this is what the swing. If we zoom out, kind of a 1,000 foot view, this is what we're looking at. So in a bull market, in a bull market, you get a big pullback. You might get a big pullback here, and then you get a few legs. Just one, two, and three. You see it here again, one, two, and three.
Hmm.
Each get steeper over time. Okay. We just had a big pullback, and I'm looking at this as leg one. All right, so we zoom into leg one. Leg one, what do we have? So the May run here. Oh, wait, hold on. Yeah, this is the May run. Okay, then we had a few months, May, June, July, August, September, October. We had 5 months of chop, and then we're into the next cycle. So if we're looking at a year-long period, and we're saying that there's two strong periods, 2013, we've got um, May through July, that's 2 months. Then we got 5 months of rest, and then we're into the next cycle. So this was November. And the interesting about this is we're kind of like halfway. I think the original earnings season was kind of not spectacular. Then we got halfway through and the growth stocks started reporting and it just
Everything
went up.
gaps.
Like
Yeah, it's
exactly.
crazy.
We had huge gaps, right? And this was a bit of a lockout because if you weren't in on that day, it was a struggle afterwards and you chop yourself up. We also see same characteristics as before, sort of like a wake off spring type thing, a fake out and then straight up. Okay, but the thing that's interesting here is that okay, the archetype I have in my mind is sort of a 2 month period. We had our 2 months at the end of November, at the end of the last earnings season, and then it overlapped with the start of the next earnings season. And then we had this sort of AI theme as well. So in my mind, at this period of time, at the end of the year, I'm kind of thinking we just went through a really good period. We might need 4 or 5 months of rest, right? And the way the numbers kind of work there is if you have 12 months in a year, you have 2 months of good periods. You times that by two, that's four. You have 8 months left, and it's 4 months in between. Just some rough maths.
Hmm.
I'm kind of thinking, yeah, maybe we'll have some rest, right? But no, the bull market keeps going, and then you have setups, and you have to take them. Like something like Nvidia sets up, you got to take it, right? So that's where I'm thinking here. On this chart here, I've got the entries and exit marked, so you can see 2 or 3 days prior. Like this is, I think a lot of people got worn out here in this kind of chop period. You had these earnings. You didn't get an instant move, but it was slowly people digesting the move, right? So you have this really strong stock. It was a leader at the time, and I think the stock probably just needed some time to digest. And like I was saying before about how if you get a strong EP season and there's a big reaction, you might not get breakouts that work really well. If you have a stock like this, which doesn't really move during earnings, you can expect a breakout to happen, right? And usually the reason this happens is because everyone knows it's a great stock. It goes up a lot into earnings, but when the earnings is out, it's kind of already expected. And so the price is high, the valuation is high. You get people who get bearish, and the growth of the company needs to catch up. So you only get um, this new information about the growth of the company at earnings. And so it takes a season or two for the growth of the company catch up and the valuations kind of reset. Then you get a breakout, right? So I was taking this trade here on this day. All right. So I tried here once at the open. Um, stopped out. I tried again later on in the day and stopped out on a tight stop. So this happens a lot. The next day, I was kind of like, the stock's not ready. Then the day after that, this is where, as soon as the market opened, this stock was going up. Like the buying was incredible. So another feature of this this chart here is the more volume that comes in, the brighter the candle is. This it was yeah, really strong. You can see it at the time as well. I've got the 3-minute chart here, and you can just see that the buying was incredible at the time. I've also got the lines marked, sort of horizontal resistance lines. I got previous day's high, which is this line here, and I've got recent highs all marked out. And in my mind, when you have a straight up period or a stock that's really strong or behavior like this, this is the action you want to see. People talk about O'Neill kind of breakouts not working anymore and things like that. It's not really that they don't work. It's more that people are focusing on them in the wrong times. So these horizontal lines I find incredibly strong and like incredibly valuable. So typical Maggie traders, they just take opening range high. But if you can add this to your repertoire, it helps you find other spots to get into the stock where you would just miss it if you didn't have this.
Right.
So I was taking it here. So you can see I took it in one lot here. It just showed incredible action and never really pulled back. So I took another lot here. Stop would have been lower day at the time. That is a 0.6% stop. And I would have not had a limit on the sizing. So 0.6%, the risk I would have taken 0.35, just because it's the setup is pretty good. 0.35, so that's like a 70 or 80% position at that point. Then you're continuing to watch the stock. It keeps going up, doesn't come back to your entry. And then you have the psychological number of 500, which is also corresponding with the top of the base. I wasn't going to add at the time, but then you just see how strong it is. And I think I don't know, I was just watching it and I just chased it a little bit here. This is what I was saying here. If you have a really strong stock and the cycle's behind you, you can chase and you get reward for it. So at that
cleans
point,
up your
it was probably
mistakes.
70. What's that?
It cleans up your mistake. The strong stock.
Exactly.
Yeah.
Exactly. And so I think it was an 80% position at this point. And what I'll do is I'll add another 0.35% risk at this point. So you can roughly see that it's twice what the price was, and I would have added 50% size to the original position. And when I do add, I'll raise the stop just to break even. So at this point, break even would have been around 500. Yeah, and that aligns with the psychological number. The way the stock was acting, I didn't think it would come back. If it did come back, I would have been knocked out of it, right? So I had a huge position in this. But you'll notice the huge position. I think a lot of people get afraid of the big position. I had my stop really close. I'd break even, in fact. So if it came back down, it's not like it's not going to gap down, right? It's so liquid. If it came back, I would not have lost any money despite 100+% position. I think it was 130% at the time. The only thing is that the stock would continue to go up and you would not be in the stock, which sucks, but you know, that's the risk to reward, right? So then the stock just keep going up, of course. I had a very large position. I was concerned about this as well, carrying it overnight. It was a very large move. This is a logarithmic chart, so it doesn't show kind of the magnitude of the initial move. But I figured with the volume that came in at the time, this is dollar volume. With the volume that came at the time, the likelihood that it would come back and stop me out was very low. I was still worried about this. So day 3 to 5, I took majority of the position off. So you can see my sell is here. I was talking in the cycle before, like, where was this? It was January, right? So we had already had our 2-month kind of run, and I was thinking this probably, you know, it's not certain that we're going to get another 2 months of a run. So despite saying that at the beginning of a cycle, you can hold longer, you can ignore these kind of red candles at the start of a move. You don't know that it's the start of the move, and I was 130% long. That's ridiculous. So I had to sell some. And at this point it was an 8% gain, right? It's nothing to write home about. But with the trail, I just left it trailing. Yeah, and this is something that with the trail, this is something that I think I follow Cal on a lot. It's something I really like about his system is I think it's something that he internalizes but maybe doesn't explain so well is these concepts about the cycle. But he will hold on, right? He'll hold on for the majority of the move until he sees that we're starting to get late into the cycle. He'll try and sell it into an extension. Right, or if he's on margin, I think he'll trim a little bit more too. And so that's something that I try and incorporate here as well. So here is my last sell on the stock. So now we're up 47%. I sell majority here. I trim halfway up, and I think I would have had like a 10% position at the end here, 10% of the portfolio that is, and I would just sold because earnings was coming up.
Mhm.
After a big move like this, yeah. So this is really interesting. People talk about, do you hold into earnings, right? I think if you think about first principles, I don't think, yeah, you look at any stock, like this is how I look at stocks. I have these earnings dates out, and I also talk about the archetype, right? If you look at every stock like this, it's the period between two earnings seasons. You have a catalyst, and then you trade each continuation throughout the earnings season. That's pretty much what a momentum stock is. If you look at enough of these, you notice that majority of them don't go up the season to season to season. Like you have an ANF, which will do that, or you have an NVIDIA um, back in 2017, which will do that. But most of the time, most stocks don't do that. They go up, they get the growth or whatever it is, the fundamentals get priced in, and then it needs to cool down. So that's kind of what I was thinking at this time. I knew it had leadership potential, but I was like, okay, I just want to keep my accounts at high. I don't want to risk something going down. That is what it did. But then I think it reclaimed very quickly. Yeah, and then I learned that there was a thing called NVDX, which is 2 times long, and I took some trades on this going forward. So I
There's
saw
three
this as a
times, I
bit of a
think.
yeah.
Isn't it three
So
times? I'm pretty sure.
yeah, and so I took some trades on this as well. I think I learned this. So I took some trades early here actually, and at this point, I think there were a bunch of other things in my portfolio, and so I was thinking anything I can do to to boost exposure. I think I was pretty long at this point, maybe 300% with all the other positions I had on. I was just trying to get some extra exposure. With a leverage position like this and on margin, I was just trying to get some quick trades on it. So I had a quick trade here, 10%. I tried this and I got stopped out. And then after the earnings, I tried a continuation. I got stopped out here. So that's pretty much the NVIDIA trade. Um, okay. Any questions?
Uh, yeah, for that last trailing 10%, if earnings weren't coming up, what
Yeah.
what type of price action would make you sell that remainder?
Yeah. So let me see here. So if earnings weren't coming up, I would have had, yeah, this moving average would have been one. This
Hmm.
gap down out of this, I mean, like this gap down would have had me concerned,
Hmm.
for sure. Like after a big move like this, yeah, you can say like trail with the 10, trail with the 20. I really prefer to just keep my accounts at highs. So if it broke out of this little range here, like I think I also traded this long. The long
Hmm.
didn't work, and like I said before, the same tactics at the beginning become opposite signals at the end.
Right.
That's where it kind of told me, like I got stopped out at NVDX here and I was like, okay, forget it. I'll just get rid of my NVIDIA as well, right? So for all intents and purposes, if there wasn't earnings here, I probably would have done the same thing. I the long failed and I took that as a sell signal. Yeah.
Yeah, that's a subtlety. I like that though. That's good. And that's
Mm.
that's like after the move's already gone trending, all that, then that the setup that didn't resolve to the upside becomes a warning signal that you picked up on. Just
Exactly.
just kind of reemphasizing that for people watching. I think that's key.
Yeah.
That's really good. Yeah, I don't think
Okay.
I have
So
any other questions on Nvidia. So unless
okay.
there's something
Yeah.
else you want to mention.
No, no. Okay, we'll go to the next one, PLTR. Okay, so this is interesting. I think people, so on the execution side, I think I have some value to add here for the Kula Maggie followers. If you're not doing open range high, something that I noticed here, so this is the trade here, okay? Earnings came out. This is a highly contentious stock, a lot of longs, lots of shorts on it. I also remember that back here it made an incredible move. At that time, this was a really big move. It was 100%. Probably realistically, you could catch, I don't know, 50% at least. And so in my mind, this is stuff that can move. It showed similar characteristics to what we're talking about here on NVIDIA, is that there was a big move, probably earnings was very good, and it needed time to digest. And then there was all this AI hype, and it was a bit of a, I guess what Pradeep calls neglected. And then, yeah, it's kind of gapping out of the range here. So I have my horizontal lines, which I talked about, are very important. This is a clear one because this is where it topped out on the first run. This here is a subtlety, this line here. Okay. I think people will think, yeah, right on, you had that in afterwards and you bought the dip. What happened here is I was in Mara around this time, okay? Um, if anyone remembers last year, there was a Bitcoin run, it was incredible. It ended in a blow off top, came down here, right? And I was looking at a mean reversion buy here, so I did trade it. I did trade it here, I sold it here, right? I tried here. Yeah, okay. So I tried a pullback buy here, all right? And I thought I had nailed the thing. I was like, this thing has momentum. At the time, Bitto, yeah, was still in an uptrend. Oh, was it? Hold on. Okay, well, maybe not. Okay, this was, yeah, oh, okay. I figured maybe it could continue going up. Okay, so I bought this dip here, and then I bought here as well. I sold here, okay, and then I tried to buy dip one more time. This is the third time. I think I finally nailed the stock, and I anticipated a breakout. On the open during that day, the next day, I thought I really did nail it, but uh, it did not go up. It rejected very hard here, okay? So all over my feed, I was looking at day traders who said they nailed the move and everything like this. I had no idea. I wasn't thinking short at all. I thought I had nailed the long side, and I just ignored the stock. And then I closed I closed it out, break even basically. So that was devastating. And the lesson I learned, okay, from these day traders is that these breakdown areas is significant. Right? Like you can kind of see a range here. A break, this is where people would have short, okay, would have come back and they would have said, okay, it's coming back to resistance, I'm going to reshort or whatever it is. So then I moved that to that kind of logic to PLTR. Here is the big move. It comes up again, rejects, right? That's pretty scary. And it rejects again. This is an add to that short.
Right.
And so that tells me it's a significant region, okay? And so I had that line in before the market opened. The other thing that's interesting is that every time it reports with a big move afterwards, it kind of screws, it pulls back, it'll stop you out on a pullback on the open. And so I had that in my mind as well. So I expected this pullback. I had this line here where I thought was significant. It almost made it up there. And as soon as it started showing strength again, I bought here. So that, like, I don't know, this was a magical 20%, 17% outcome where it really just worked out. So I have to attribute some to luck, but I think there was some planning here too. At this stage, February, let's see. Yeah, it just the response was fantastic. I had this not all time, but recent high here, and it traded really well through it, right? It rejected here, that was expected. The next day, it just blew through it. So that's, you know, it acted very well. I think I was 30% long, and it moved up, yeah, 20%, 17%. And so I figured I'd take some off. Didn't want to get too greedy, and it felt like a big position at the time. Yeah, in a contentious stock. So I just thought I would take some off. And it didn't really follow through like the NVIDIAs or the SMCIs did. In my mind, it's categorized less as one of those fundamental leaders with the story behind it. It's more a contentious stock. It did make a really big move before, but I was starting to see that it didn't kind of move off. Like I would expect it after 2 or 3 days just to keep going. It didn't do that. And then it had similar action to how NVIDIA was behaving, broke down the range. I figured I'd sell. I did try it again, and I got stopped out, right? So that's PLTR. Questions?
No, I think that's explained well. I was trading the same time and I wasn't quite as effective as you, but that's a nice trade.
Yeah. Okay. Cheers. Let's see. So CLSK. This was actually the biggest trade throughout that period. Yeah. So there's a bit of a backstory to this one actually. I had MSTR in a run last year. So what did I buy? Let's see. Oh, it's not showing my buys. I think I bought it maybe back here in this run. And at the time, I really regretted it because this moved up 57%, but Mara was up much more. It was up, you know, like 80%.
Hmm.
And so, you know, I went with the slowest name. I think I was able to MSTR. The next stock I traded after that was like, okay, MSTR is too slow. If there's another move, I'll trade coin. And I did trade coin. Where did I trade it? I traded, I think, for this run in here. And it didn't Yeah, it was pretty good. But then CLSK was also very strong at that period. This was a leader. Look at this. This went up 200%, whereas coin went up, 100%. So each time I was going for the fastest stock, that's where it really imprinted in my brain that you got to go for the fastest stock. And there's opportunity cost there. But that's when I went to CLSK, and this is probably something that's interesting for people to note is the FOMO. Like it can be bad, and people try to eliminate it. This is a situation where the FOMO guided me to pick the right stock. I saw this go up a lot that time. I didn't take it, and so the next time it broke out, I thought this is the one that I really need to be in. Yeah, and so here, so where are we now? Yeah, okay. So Mara, okay, so Mara here, okay. At this period of time, I had traded Mara, and then what was that? Bito. Yeah, Bito. This was forming a flag. Okay, it was after the big blow off in Mara and stuff, but then it came back. It kind of faked a bunch of people out on the weekly. I think you can see it clearer. It reclaimed very quickly, formed a range, and it broke out again. And you could see it in the price action. Like I like to look at the intraday, and you could see that something was happening here. It looks a lot like what's happening today. Oh, not in this chart, but on the 24-hour chart, it kind of looks similar now too, which is interesting. But at this period of time, I was kind of thinking this could really break out again. It was really in a really tight range, which meant that you could get really low risk. I wasn't really thinking the ETFs yet at the time, but I was thinking that one time that I missed CLSK, right? So this was a bit of an anticipation for anyone who looks at these setups. You'll think this is not really a classical setup, right? It's below the 50, it doesn't look like a flag, but it did undercut and reclaim. We talked about that before here, and then on the intraday, you had this bit of a range here. I was trading this more as a like a proxy to Bitcoin at the time. I thought you get more leverage and more of a move here. And I wasn't actually really not confident in this trade, but it turned out to be the biggest trade, right? So I tried it in here. Would this be in the morning? Yeah, in the morning. Didn't work out. I was still awake at the time, and so I saw this range forming, and Bitcoin itself was breaking, well, it was showing strength at the time, so I kind of anticipated this buy here. So I started buying. Stop would have been lower this range, 0.7%. I think I only had a 0.15% risk. I wasn't very confident in this trade. So it corresponds to, I think it was like an 8% position. And as it showed strength, as Bitcoin was showing strength, I added to it. Again, same risk. I moved up the stop, and I really expected this to get stopped out. Because if you look at the natural price action, I don't think it's outrageous to expect that it might come back. But that was the risk. Like it was a risk-free trade. I got a free look. That's how I was thinking about the trade. Then it broke out of this range, and you start seeing the volume come in. Bitcoin was acting super strong. I think it was starting to break out, and it was breaking out really strong. So I was starting to chase again here. Just want to reemphasize that this type of behavior is really deadly if you're not in the right cycle, market cycle. But it ended up working out. Because it wasn't a setup, I was really concerned that I was chasing and that it would reverse. At this point, I had a 15% position, but my stop would have been around here, around like opening range highs. And I think that's like a good natural spot for it, where if it breaks that range, you're thinking, the trade's not going to work. At the end of the day, it closed really strong up here. I thought there was enough buffer, and Bitcoin had broken out of a, like a multi-week base. And so I was pretty, I was like, okay, I'll take the risk. There's obviously still a risk. I'll take the risk. And next day it gaps up. And after this trading session, the earnings came out. And this is where the FOMO comes in. So I was thinking here, on this day here, it gapped down on earnings, but pretty much immediately it reclaimed on this incredible candle, held up at recent highs, and then just blew through. Okay, so I had that precedent in my mind as well. I had some here as a 12% kind of buffer, and so I just held through. And Bitcoin had made an incredible move, an incredible breakout. And so I was thinking, okay, I'll just hold. It gapped up again, and I was thinking, okay, that's enough. I took enough risk. I should pay myself for it, up 60%. And then the rest I just trailed with. Yeah, so it continued to gap up, and I was just selling on the way up. Yeah. The final parcel was on, I thought this was kind of ridiculous. It kind of looks like it's getting extended. Bitcoin itself kind of looks like it wants to pull back. And so I just, instead of watching it, I just put stop at the lower of the day and I got hit out lower of the day. Yeah. So that's a CLSK trade. I didn't expect this to be such a strong trade. It wasn't really like technically a perfect setup or anything like that. It ended up being my biggest trade on like a pretty small position too.
How much of your selling do you think is into strength versus that last bit into weakness? It seems from the examples you've shown, you're pretty aggressive with selling as it's working for you, that first initial move.
Yeah. In the back of my mind, because I'm so long leveraged, I know that, yeah, a pullback is going to be multiplied, and that
Right.
really scares me.
Right.
I'm also thinking the competition, like I'm incredibly lucky to have these gains. I should book them while I can, and just sit on my ass and enjoy. Okay, so that's pretty much the CLSK trade. Let me have a look here. It continued to go higher, and looks like I did take another trade here and sold very quickly. At this stage, I'm like, this is extended. It already had a really big blow off move. And can I expect another one? The chances kind of reduce going forward. It's not really a big base. And I just took it as a swing, and kind of similar here. This one was, I guess by the executions, you can kind of tell I was trailing and expecting a bigger move. But yeah, I just kept it tight, right?
Hmm.
Okay, so next one is SMCI. So this is where SMCI, yeah, this is where um, that pullback, range breakdown horizontal line comes into play again. So now we've had the Mara experience, we had PLTR, it worked really well, and then this is SMCI. Okay, so SMCI, this is not a stock that I would normally trade. If you look at its trading history, it's quite choppy. And I think I did try it back here at some point, and I just lost money on it. Then there was this period here, which, it went up 180%. Market how was the market at the time? It was pretty strong. And I missed it at the time. Again, another stock I was like, okay, why am I not in this? At this period here, I think Nvidia tried to go. Oh no, this was back here. SMCI. Yeah, here. Yeah, here.
Hmm.
Nvidia. Yeah. Tried to go AMD same time. Yeah, AMD was strong at the time.
Hmm.
So I was watching these. I think at this point I tried some Nvidia. I was like, I picked the worst stock, look at Nvidia, it's up heaps, and then SMCI is up a lot too. And at this point, probably on this day, I was like, okay, next time this goes, I really need to try this. There's a bit of a character change from what was back here. It's a bit choppy, but then there's this big base forming. And of course, I'm watching it, I'm tracking it, and it does all this, which is not great. Goes up again. And this was with Nvidia at the time too.
Hmm.
And Nvidia was up 16%. Nvidia was up how much? 8.8%. So this is a 2.6 ADR stock, and this was a 5.4 ADR stock. Is up 16% three times, right? So Nvidia was up higher relative terms, but this was up more in absolute percents. So I wasn't in the stock at the time, but this really caught my attention, and I was like, I'm in the wrong stock again. It reminded me of the MSTR coin and CLSK kind of thing. So it was on my mind, and I was like, please don't break out here at highs of days. I want another chance at the stock. It breaks down, and I was watching it for this 20-day reclaim.
Hmm.
I was looking at it here. I didn't take the trade. The next day it was weak again. And this is something the market loves to do. And something that actually is really interesting, because if the stock shows weakness and it shakes everyone out beforehand, it sets the supply demand balance up for a really big move, right? Like people who have been shaken out want to get back in. People who are negative, who didn't have it on the watch list, see it on whatever social media come up, and you're like, I missed it. I wasn't watching it. Chase. Okay. So this, and then shorts, of course, shorts are in it, in this, at this line here, and then it breaks, they have to cover.
Right.
So something that's neglected like this really sets you up for a really big move. I was still watching it because I was still experiencing that FOMO. I was like, maybe it'll go. It was showing strength. Was it a pre-earning? Do you remember,
Pre-announcement.
Richard? A
Yeah. Yeah. Yeah.
pre-announcement? Yeah. Um, and it was in pre-market. Where was it? Pre-market. Yeah, pre-market, it was trading around this range. I had my lines marked out. You see that this breakdown range corresponds with this here, this candle before it broke out, you have the
Hmm.
all-time highs, and it was the same thing. It was the same thing. It happened super quick. Let's see. Yeah, it was very similar to PLTR. When it reclaimed, I took a little bit of a position here, added to the opening range highs, and then I had this line, which is, yep, the all-time highs, and I just bought through that. So in my mind, I was thinking NVIDIA, right? This is pretty much NVIDIA. The results were fantastic, similar looking base, same theme, and that was it. I did get like this was an incredible move on the first day. It went up, it go up 20%. All right,
Hmm.
that's crazy on this volume. I did get shaken out a little bit on the next day. I got a 30% position on the first day. Um, and look at this. Just look at this. This is terrible. Um, that's scary, right? Like I'm watching
Yeah.
the 3 minute and it's just selling off. My sell, my sell is, does it show here? It doesn't show. I got like the bottom tick here. I was that guy. They got shaken out. So I'm down to, I think 1/3 position in this. Right, so similar to CLSK, I'm like, I screwed this up as it reclaims and it just keeps going up higher. The next day, I sell a bit more. And it's not looking good. And of course, it just keeps going up higher and higher. Um,
I'm,
at this
I'm
point
pretty
here,
sure. Sorry, to jump in. I'm
yeah.
pretty sure that
Yeah.
sell-off, like perfectly found support with the anchored VWAP from that first day. Like
Oh,
it was super close.
yeah, yeah, that might be something I have to look into a bit more, but oh God, I fumbled hard. And that, I was talking about January, I fumbled a bit and I kind of overtraded. This had something to do with that for sure, because I was like, this is probably the best trade I'm ever gonna make. And then I screwed it up and I was like, I need to make those gains back. Okay, so that's probably where my head was at. Anyway, so it keeps going up, and then you get this sort of parabolic kind of move, an extended kind of move. And I had a similar kind of thinking. I was like, okay, I'll have stops around the lows and I'll just stop out if it doesn't work. Turns out that this is the action that it just continued to happen, that continued to happen for quite some time, right down here. And so I didn't catch the top. The next day, like the end of the day, I was probably feeling really, really stupid. The next day after it gapped up, even more stupid. And then I wasn't feeling too bad after that. So that's the SMCI trade. Um,
Yeah, I would if you anchor VWAP to that first 5 minute bar,
mm,
it pulls in that next day, and then the day after that there was another sell off. It finds support
yeah,
there again. So
yeah,
yeah.
yeah, yeah. And this is really interesting. And day by day, this is where you kind of learn the character of the stock too, right?
Right.
I should have kind of known because it exhibited some kind of these characteristics beforehand. But the next day after the big move, you don't really know how it's going to behave. Really, you should be giving the stock the benefit of the doubt. But I was scared. I was like 20% in a day on a 30% position. That's pretty good. Like I don't want to be giving back these gains. But then, like you said, Richard, the next day it shows similar behavior, and that's where I was kind of like, okay, I need to give the stock room, right?
Hmm.
Um, yeah, yeah. Okay, so what's important probably to note is where we are in the cycle again. We're talking about where we are in the cycle. So this is the blow off top here. NVIDIA, where was this? Yeah, so this probably added to me wanting to sell here, right? Um, yeah, so it went up. I took NVDX. It didn't go. I sold it. I saw what was happening in SMCI, and in my mind, I'm already like, this thing's crazy. Like, how high
Yeah.
can all these things go? Right? Yeah. So you say that it looks like I sold into strength. In reality, in my mind, I was like, I've been doing really well to hold this up. Yeah. Yeah. Okay. And okay. Yeah. And this is where AMD was. This turned out to be the first top. So. SMCI. This turned out to be the first top. I didn't expect for another move to go, right? Like this was already pretty insane. But I ended up trying these again. And something you'll notice, like remember level number two, is I try and take the same stocks, like in the same sector. So if I see all of them really strong, that adds to my conviction. Look
Right.
at here, NVIDIA, was this SMCI, NVDA, no, NVDX. Yeah, I was trying it on this day. AMD, AMD, I was trying it on this day,
Hmm.
right? So yeah, the activity corresponds, and this is again where you're listening to your emotions. You're like, all of these things. I'm having FOMO on this day. Everything looks strong. I need to be in these things, and it draws you in, right? And so that's kind of what brings you to like chase a little bit too. You're like, if everything's going up, and this is yeah, I could learn from this myself because seeing China go up the other day, I didn't take any of them. This was similar kind of action, right? The whole sector was going up. Everything was being bought up. Bright green candles, right? Okay. And the last trade, any questions there, Richard? No?
No, I think I asked them.
Okay, cool.
Oh, nice, you caught this
Um,
one. What a move.
yeah. So sound, uh, let me see, sound. Yeah, third biggest trade in this period. Um, I had already traded this back here with losses. It made really big moves, and I was watching these things, and I got chopped up on them. So it was already in my mind as something strong. This Okay, so we're talking about the phases of the market. Okay, so we're talking sequentially now. Let me see. Yeah, so halfway through the move. Okay, I think this was about a month in. NVDA, SMCI, right around the same time. PLTR, I would say this was the second bucket. So already, yeah. So you can see as well on this day, I also took PLTR as well as sound. This didn't work. That's right. And ARM is another one that was kind of I would group PLTR in this. I did trade this as well.
Hmm.
Um, sound. So now we're getting into the bottom of the barrel kind of stocks. So we
Right.
have NVDA, we have PLTR, ARM, and yeah, which I think are kind of the middle. And then this is the bottom of the barrel, the ones that go up the most at the end. And these are really dangerous to trade because the volatility is so high. So entries, you get stopped out very easily. But then also, because they go up so much, and they correspond, this is the problem, they correspond with the blow off top in the market. And so your gains can go very quickly. And it causes you to get emotionally go into tilt. And then it just, you just go, yeah, it's no good. So anyways, I think Sound and RXRX and NNOX. Here's the day we're looking at. I think they all came out with news that NVIDIA had positioned in them. It was like meaningless size, but
Yeah.
that was the news. I tried NNOX. NNOX is another one that's interesting. We're not talking about it right now, but back in this May run, this was actually the leader of the small cap space. This was the first kind of EP to set everything off. So this was already in my mind as well. So I tried this and took like, I probably only had like I don't know, 2% position in this, and I got stopped out at 10%. RXRX was another one, and Sound. I think there was another one, Rail. It's like Rail Vision or something. They were
Oh yeah.
already, and yeah, yeah. And there was also like if you look at AI, I also traded these here. I was using this yeah, kind of this archetype of the crappiest stocks go up later. AI kind of is like a PLTR to me. And so before the sound stuff kind of went, my antennas were already up because it was showing some strength in AI. I think the other one I took was Rivian, and I was like, okay, these are all kind of bottom of the not bottom of the barrel, but we're getting there. And this tells you that maybe there's some speculation similar to how we're seeing some moves in GME. Okay, so right now. So anyway, so that's how I was thinking at the time. And okay, so obviously the first trade didn't work, but you just wait for it to set up again. And it's just like on the hourly, it forms this very clear range.
Hmm.
Um, okay, yeah. And then at the open, you see these bright green candles as well, which means there's accumulation. And I think I just took open range highs. And that was it. It just worked.
Did
It
you
just
try this
worked.
one a few days earlier?
I think,
There was
yeah.
like a false move that looked pretty promising. I was just curious if you tried it earlier.
Yeah, this one on the third day, you mean, or
Yeah, maybe I'm remembering it wrong. Yeah, did you try it before this, or this is the first trade that you made in it?
first trade was on the EP day. It's like the
Okay.
the gap up day itself.
Yep.
Didn't work. Um, I was pretty scarred by this. I think I took a pretty big, like I had more than 0.3% risk in this because I was like, this could really go. Um, And when it didn't, with the big red candle, yeah, I took it off my radar for a day or two I was kind of like, this could put me in tilt. So I just took it off. And then
Hmm.
I started tracking it a little bit after when it started forming this really nice range. Yeah. So this is this. And I have my horizontal lines in here on the breakdown range. And
Hmm.
that corresponded there. So when it was approaching this line here, I was thinking, yeah, with this type of volume, similar to the others, we're in a straight up market. This is probably bottom of the barrel stock. We're just going to move the most. And I did chase this up a little bit as well. Let's see, yeah. So here approaching that breakdown range,
Hmm.
there a little bit more here. And as I'm going up, this will remind you of CLSK a little bit. So I'm chasing, and the stops are going up, up, up along the way.
Yep.
I was really lucky not to get stopped out by this candle. If it stopped me out, I would have been out, and we wouldn't be talking about this, right? So risk first always. Yeah.
Yeah, it pull in was right to that breakdown level.
Mm-hmm. Yeah. Yeah, exactly right. So I think that's pretty much it. Those are like the five best trades that I had there, Richard. Any more questions on those?
Um, I think kind of an overall view. So just to kind of summarize what I've heard about how you execute in position size, you you obviously you know what your risk is, where your stop is. You have an acceptable amount of risk you're going to take based on the perceived quality of the setup and opportunity, and then you'll look to add additionally as it kind of proves itself, triggers more levels that you're watching, moving up your stop as you go to keep that original risk. Is that a good summary of kind of your process, or am I leaving out
Yeah.
anything there?
No, that's perfect. Yeah.
Yeah.
Yeah. Sorry, I'm just showing AMD is another really good example of where these horizontal lines where you can add without using open range high. But yeah, Richard, I think you really hit the nail on the head there. Yeah.
Yeah. No, I think that was a big take. Like Oliver does it very similarly, so that's cool to see. And I think these trade examples are really good because, you've kind of taken us today from the high level overview of your system, how you've gone about approaching designing things, all the way to the entry tactics. So this has been really, really good. Just gonna stop your screen share here. My last question, that I always like to ask is kind of what advice do you have for traders watching this in terms of developing a system, dealing with that first year or two or more of like struggles where you're trying to figure everything out, figure out what resources to really focus on. Yeah, what would you kind of say to your past self to help inspire and yeah, help yourself out in terms of accelerating that learning curve?
Yeah. I'm a bit two minds about these things because you kind of have to go through these things to learn them.
Yeah.
Whether or not you can skip some of these things, I think maybe you can jump. Like if you really internalize the things that I talk about and you start backwards, you might have a chance, maybe. But if I was to tell myself again, I probably wouldn't listen. I wouldn't listen. Um, a few things I would do sooner though. One is I would get onto X and just start posting my opinions on things. Like I would do a shortened version of what I do here, or I would do what I do in my process today. I think a lot of the reason people don't do it is because they're scared and they think like I'll be wrong and I'll look stupid. But I think this is another mental hack. The mindset you should have is my view of what's going to happen or what is happening is based on the facts that I have, and it's what I expect. If the market acts differently, it's not moving in line with what I expected. It's not that I'm wrong. Like you are wrong, but it's not that I'm wrong. It's just that the market isn't moving in line, and you need to have that you need to set a hypothesis first, and then you have the test come in. Whether or not only then can you compare and know if you're truly right or wrong. If you jump straight to social media and you listen to someone caught this stock he's selling a newsletter, like, it's going to be a disaster for you mentally, right? So something that I really encourage is to solidify, put it out there. Um, use a different name. You can use a fake name, Richard Mugaloo, whatever. Um, and no one will know who you are, but you will still feel that pressure when you write it up. Someone else is going to listen. Oh, should I double check this? And that has a layer of accountability to it. A little mental trick. The second, which I think is really important too, is if you're really passionate and obsessed about this, I think naturally it will happen, but you just start talking to everyone that you can possibly who's at sort of an equal level or a bit higher. Um, about certain things. So you'll put in the work and then you go to these guys and say, this is what I found. Is this kind of interesting? The people you talk to will probably be just as obsessed as you are. They'll talk to you too. And eventually you'll make friends and you can start a pod or something like that where you start talking about your trades and you find someone who's really outperforming and you bug them like crazy. It can either be someone in your own style, like a Chris style, but there are subcategories of the style too who use different tactics. So I like to use really close stops. The person that I learned the most from is actually the anti-style of me. He
Hmm.
uses very wide stops, and he tries to just focus on the best stocks, and then he lets them ride with bigger drawdowns and stuff like that. Of course, doesn't work for USIC, but yeah, that's what I would suggest and it's not easy. Like you need to have a little bit of luck involved. It took me a couple of years to find these people, but that is the best type of mentor you can have. You're listening to yourself through your process. You're mentoring yourself, but also you're learning from the people around you, and you need that constant feedback and iteration cycles. Going back to the value investing days, 3 years
Yeah.
for a cycle is terrible. Like 2 months for a cycle is terrible. If you can get there like day after day or week after week, you can really compound the knowledge very quickly. So that's probably the main bit of advice. The other bit of advice, like I don't really focus on it too much, because I rely more on process, but it's the mental side of things and being in the right mindset, getting rational about things, right? Like what I was talking about with, like, you do have to have a bit of cockiness with, it's not me that's wrong, it's the market that's wrong, right? Or you can have a little hindsight bias. People will say, oh, you're Monday morning quarterbacking, but really what you're doing is you're speaking the truth of what the market is. If you say it in your head, it doesn't sound too bad. If you say it out loud, people will start saying like you're just saying, yeah. But that's the mentality that you need to have. You need to protect your mindset as well, right? And so give yourself every chance that you can. Talk about yourself positively. Don't use deprecating jokes and things like that. And that's pretty much it. The other bit of advice is probably study a lot, study as much as you can, but don't go overboard because yeah, it comes at a cost and you can't push things. You have to you have to experience the market. So those are the main things that I would give to probably myself if I was starting getting, or someone else who's going down the same route.
Yeah, I think that's really good. That level 3 and level 4 take time. And in a sense, you're always working on that, really. Anthony,
Yeah.
I've really enjoyed this. I mean, I'll enjoy watching it back and taking notes. So thank you very much for your time and sharing with your process. Wish you the best of luck into the end of the contest. And I'll have links to your Twitter down below. Is that the best way for people to get in touch with you if they'd like to? Or yeah,
Yeah, that's
okay.
it.
Yeah, perfect. Well, thank you very much for your time. I really enjoyed this. It's great chatting with you. To everybody watching, I hope you enjoyed as well. Leave a like down below if you enjoyed, subscribe to the channel, and we'll see you guys in future videos. Take care.